Yes, people. Yes, yes, yes. Hi, everyone. Is my voice audible? Is my voice audible? Hello, 1, 2, 3, check. Check, check, check. Hi, everyone. Yes, people. Is my voice audible? Give me a thumbs up for those who are online right now. Tejaswi Pawar. Hi, Tejaswi Pawar. How are you? Guys, I would like you to, share this YouTube link to everybody, wherever groups you are in, so that everyone can benefit from this live marathon. Okay. So I would want you to share with everyone so that this live marathon will be super, super excited, super, super fun. Okay. The more the people are engaged, that amount of excitement will be there. Perfect. Recordings, Nancy Pursnani. Hi Nancy. Hi Rajesh. Hi Recordings. What is your name? Recordings. Rahul Jaju. Hi sir. Rahul Jaju. Good morning. Good evening. Good evening. Perfect. So shall we get started? Guys, quickly tell me, where are you all from? I'm seeing new names over here. Rajesh was not there yesterday. Nancy was not there yesterday. Nancy, Rajesh, kindly tell me where are you from? And Recordings, you also kindly tell me where are you from? Hi Sakshi, how are you? Uma Maheshwari, good evening. Tejaswi Pawar, Pune. Yes, Tejaswi. Amazing. You are from Jaipur, Rahul Jaju. Okay. Nancy is from Jalgaon, Maharashtra. Rajesh is from Hyderabad. Fantastic, guys. Fantastic. Okay, this is Sumita ma'am here. Okay. All right, guys. So let's get started. Sumita M is from Chennai. Okay. Sumita, Tamil பேசல நீங்க? Tamil பேச தெரியுமா? Chandrasekharan Gopalan. Hello sir, good evening. எப்படி இருக்கீங்க sir? Ishwarya Palanipan. எப்படி இருக்கீங்க ma'am? Ishwarya ma'am. Guys, I can talk Hindi, I can talk Marathi, I can talk English, I can talk Tamil. Quickly tell me, I am doing great in your mother language. Koncham, okay. Konjam. Konjam theriyam Tamil. Seri. Ishwarya Palanipam, I am Tamil sir. Great. Abhinetra Coimbatore. Oh my god, that's amazing. Amazing guys, amazing. So I guess my majority of the crowd are from Chennai. That's super cool. Perfect. Okay guys, so let's get started. Okay, without wasting any time people, today my goal is that I will stick to the timeline. Okay, by 9 p.m. I will try to complete. Now today our target is to complete with the FEMA laws, FDI, LRS, ECB. Next, competition laws. We're going to cover Competition Act 2002 and Competition Commission of India. This is our target. Today our target is, in these 3 hours we need to complete 5 chapters. Yesterday your lectures amazing, sir. Easy to remember all concept. Thank you, sir. You're welcome, Ishwarya Parnipa ma'am. That's so good to hear it. So good. I'm super glad that my lecture was super useful to all of you guys. Amazing. Guys, I'm going to come up with an special gift for all of you by the end of the marathon. Okay, and on last day of the marathon, I'm going to teach you how to remember sections in a way that magicians remember sections. That you will never ever you will forget the sections throughout your life. This is my promise. And it's not like you have to, rote learn the sections, you have to by heart the sections, nothing like that. It's a cakewalk for you. The process of remembering section will be cakewalk for you. After you remember the section, it is my guarantee that you will never ever forget the sections throughout your life. This is my promise. This is a magician trick I'm going to show you on the end of the marathon class. Okay, people? Siddesh Reddy, hello sir from Pune. Hi Siddesh. Guys, Siddesh is my best friend, so he is watching my lecture just to give me a support. Rajesh, thank you so much, sir. Welcome, Rajesh. Welcome. Notes. Rajesh, notes, you will get it from a description. Just fill the form. You will get your notes, okay? All right, guys. Without wasting any time, let's get quickly started, okay? Are you guys ready? Are you guys ready, people? Give me a quick thumbs up. Today we're going to have super huge amount of fun, guys. Are you guys with me? People, I would want you, once this marathon is over, I would want you to just go through my notes. Just try to recollect whatever points I have taught you. And apart from that, you have to solve the expected questions. Just check for yourself whether you are able to solve the expected questions or not. After solving expected questions, I would want you to solve the MCQs. 50 MCQs per sub-chapter I have given you, people. So, I would want you, the MCQs have been prepared with a lot of care and love. So, I would want you to just solve the MCQs as much as possible, okay? My goal is, your goal should be to complete 50 MCQs per chapter before the exams. Because people, 30 marks is going to be coming to you for free, right? So, just try to complete the MCQs, just try to attend the expected questions, and then try to recollect whatever I have taught you in the marathon. Understood, people? Perfect. So let's get started with the first chapter, that is foreign direct investment. Foreign direct investment. Let's get started quickly. Perfect. People, in this chapter we're going to study number 1, key provisions of foreign investment in India. What is meant by foreign portfolio investment? What is meant by holding of foreign investment? Then investment vehicles. What are the prohibited sectors for foreign direct investment? Then what is meant by capital instruments in the context of FDI? What are the sectoral caps on foreign investment? What are the permitted investments by person resident outside India? Then what is meant by convertible notes in Indian startup? Then how is the total foreign investment calculated in Indian companies? What are the conditions for exit for foreign investment in India? That's it. These are the most important topics of this chapter, okay? Do not worry. I know people, just by reading the topic's name, you will get worried. Do not worry at all. These are super easy topics, okay? Your first impression is only difficult. Do not ever scared by that topic. Do not ever get scared topic, okay? Just try to understand what exactly is that topic trying to tell me. If you understand that underlying concept, then there is nothing to worry about. It is cakewalk for you, okay? All right. So let's get started, people, with the first provision, that is, with the first concept, that is key provisions of foreign investment in India. So people, foreign investment can be of two types. Number 1 is foreign direct investment and number 2 is foreign portfolio investment. Now let's try to understand this using mind maps. Yes. So what is meant by foreign direct investment? That is investment made by person resident outside India in an unlisted Indian company or in a listed Indian company. But in a listed Indian company, the limit is 10% or more of the post-issue capital. So foreign direct investment means investment by person resident outside India in either of the two categories. Number one is unlisted Indian company, there is no limit, or FDI, that is 10% or more in a listed company, that is called as FDI. So over here people, if you see, in a listed company there is a limit 10% or more, but in the unlisted Indian company there is no limit. So even if you invest 2% in an unlisted Indian company, that means it will be categorized as foreign direct investment. Now, what is meant by fully diluted basis? Can anyone tell me the meaning of fully diluted basis? What is meant by the meaning of fully diluted basis? Come on guys, quickly tell me what is the meaning of fully diluted basis? Foreign direct investment means investment by person resident outside India in an unlisted Indian company where there is no limit, or 10% or more in a listed Indian company is meant by foreign direct investment. Rajesh, Sakshi Jalan, Abhinetra, Tejasvi, Ishwarya, Parnipan. Guys, tell me the meaning of fully diluted basis. Okay, till then I am going to explain you what is meant by foreign portfolio investment. Foreign portfolio investment means again investment by person resident outside India in the capital instrument of strictly listed Indian company. But over here there is a limit. Less than 10% is the limit. Now after less than 10% we are going to understand something very, very beautiful. Guys, I guess you are not able to understand the meaning of fully diluted basis. Means people what? Wherever from either preference shares, whether equity shares, whether convertible debentures, convertible warrants, convertible shares, from all sources of investment is called as fully diluted basis. Which means what? Just because I am invested into equity shares and I am investing into convertible debenture, that will not mean that only equity shares will be counted. Every single source of investment will be counted. That is meant by fully diluted basis. Understood people? Just give me a quick thumbs up if you understood the meaning of fully diluted basis. Means what? Investment is calculated from all the sources of capital that you have investing. Whether it is equity capital, whether it is convertible debentures, convertible warrants, convertible preference shares, all sources of capital will be calculated to find out your total investment. That is meant by fully diluted basis. Okay. Next, talking about foreign portfolio investment, less than 10% of post-issue equity capital on a fully diluted basis. Over here, fully diluted basis means what people? Over here, equity shares will be involved, convertible debenture will be involved, convertible bonds will be involved, ESOP will be involved. Basically, the end category of investment, end category of security is the equity shares. So convertible debentures are getting converted into equity shares, convertible bonds are getting converted into equity shares, ESOPs are converted into equity shares. So end security is the equity shares over here. Fully diluted basis, post issue equity capital is meant by that. Now what is the meaning of 10% of paid up value of each series of capital instruments? Each series of capital instruments means what? Over here equity share will also be counted, preference shares will also be counted, but over here there were only convertible debentures, convertible bonds, ESOPs. Over here, preference shares are also included, debentures are also included, bonds are also included. Over here, includes securities where the end security can be equity shares or it cannot be equity shares. So this is meant by each series of capital instruments. Did you understand people? Just give me a quick thumbs up if you are with me. Perfect. Let's quickly revise it again. Foreign portfolio investment means investment by person resident outside India in the capital instruments of a listed company, where less than investment is less than 10% of the post-issue equity capital, or less than 10% of paid up value of each series of capital instruments. Each series of capital instrument will include equity shares, preference shares, debentures, bonds. But over here, fully diluted basis means equity shares, convertible debentures, convertible bonds, convertible ESOPs. Basically, end result is equity shares over here. This is meant by foreign portfolio investment. Perfect, Rajesh. Perfect. Now, people tell me foreign direct investment. A person outside India has invested in listed Indian securities 12%. It will be considered as foreign direct investment. Now, supposing he sells 5% of shares, his resulting shareholding is 7%. Now, will it be categorized as a FDI or an FPI? Tell me, what is your answer? Let's say Jeff Bezos has invested into Reliance. 12% he has invested. It will be classified as FDI. Now, 1 month later, if he sells 5% of shares, resulting shares is 7%. Will that 7% will be categorized as FDI or FPI? Tell me, people, quickly. Guys, what happened? Tejasvi, Abhinetra, Rajesh, Atul, Sakshi Jalan, Ishwarya. Okay, people, now try to read this. Jeff Bezos, supposing he sells 5% of shares, resulting shareholding is 7%. Then it will be categorized FDI, even though his shareholding is less than 10%. Because to avoid unnecessary calculation again and again, to differentiate between FDI and FPI, law says that once you are categorized as FDI, even though your shareholding falls below 10%, still it will be categorized as FDI. Perfect, Abhinadra. Perfect, perfect, perfect. Now, so foreign investment can be held by three types. Number one is either foreign direct investment, foreign portfolio investment, or number three is investment in Indian securities issued abroad. What is meant by Indian securities issued abroad? Which means what? Let's say Infosys wants to raise capital from UK. Now, instead of listing Infosys shares into foreign stock market, what Infosys does is Infosys gives its shares, let's say 10 shares Infosys wants to list in the foreign. So what Infosys does is Infosys will give these 10 shares to a foreign bank. These foreign banks will convert that shares into tradable shares of foreign, which means what? Basically KitKat, which is an Indian chocolate, only a wrapper is changed, people. Only wrapper is changed. The chocolate remains the same. This is meant by depository receipts. Basically, Infosys, if it wants to raise capital from UK, US, foreign markets, then what Infosys does is instead of listing their shares on foreign stock market, which will require a lot of compliance and regulatory procedures, what Infosys does is Infosys gives its shares to a foreign bank, and that foreign bank converts this into foreign tradable shares, and investors from foreign will buy the shares from foreign banks. So Infosys has raised US dollars. Infosys has raised US dollars without listing on the foreign stock market. This is called as depository receipts. So FDI can be raised by three ways: Either can be it can be FDI. Foreign investment can be raised in three ways. Either it can be FDI, FPI, or depository receipts. Is everybody with me, people? Is everybody with me? Yeah, just give me a quick thumbs up. People, this FDI chapter is little complicated, okay? Do not worry at all. I am there to make sure every single topic is a cakewalk for you. Okay? Is everybody with me? Just give me a quick thumbs up. Just drop me a heart. Perfect, Ajesh, perfect. Now let's talk about investment vehicle. This is super interesting, guys. Super interesting. What is meant by investment vehicles? People, investment vehicle is an entity registered and regulated by under SEBI. Now let's understand using a mind map. Okay, these texty are very confusing. Let's understand using a mind map. Yes. What is meant by investment vehicles? Investment vehicles means basically what they do is they collect all the money from the investors, and then where do they invest? They invest in assets or projects. The goal of the investors of the goal is to generate stable returns is the goal. For example, tomorrow there is a property worth 200 crores. I have only 1 CR in my bank account. Can I buy this property? No. So what I will do is I will go to a investment vehicle where, like me, a lot of people will contribute money. 200 crores is done. They will purchase this property. They will give the property on rent. Whatever amount is earned by rent, I will receive a share in that. This is meant by investment vehicle. Understood, guys? Gauri, okay, Gauri, where are you from? Rahul, Kanchan, Rajesh, Abhinitra. Perfect. So, investment vehicles, what happens in investment vehicles is they usually collect money from the investors and then they invest in where? Assets and projects. The goal is to generate stable, people understand this word very carefully, stable, to generate stable returns for investors. This is meant by investment vehicles. Now, what are the types of investment vehicles? Investment vehicles are of 3 types. But before that, let's understand investment vehicle is registered and regulated by SEBI regulations. Investment vehicles are registered and regulated by SEBI regulations. Basically, there are 3 types of investment vehicles. Number 1 is real estate investment trust. Investment vehicle that collects all that money. Where do they invest? They invest in real estate properties, commercial properties is meant by real estate investment trust. What is meant by infrastructure investment trust? Infrastructure investment trust is an investment vehicle that collects money from the investors and they invest where? Or they invest in highways, roads, hospitals, basically infrastructure they invest in. Next is what is meant by alternative investment funds. These people again, they collect money from investors and then they invest where? Alternative ways of investing. What are the alternative ways of investing? It can be gold, it can be silver, it can be farmlands, it can be crude oil. These are the sources of alternative investment. Correct? Stock market is again alternative investment funds. Okay. So 3 categories of investment vehicles: real estate investment trust, infrastructure investment trust, alternative investment funds. Now, venture capital funds will not be categorized as investment vehicle under SEBI. Why, people? Just think of reason why can't venture capital fund will not be classified as a investment vehicle. The reason is, I told you, goal is to generate stable returns for the investors. But venture capital fund, they invest in startups not to receive stable returns, but to become millionaire, to become billionaire, right? So if the startup fails, they will lose money. If the startup becomes successful, they will earn a lot of money. So over here, the goal is not to earn stable returns. The goal is to only generate profit. There's a difference between generating profit and generating stable returns for the investors. Hence, venture capital fund are not classified as investment vehicles. Is everybody with me? Anuradha, where are you from? Gauri, where are you from? Perfect. People, this chapter is, you may seem it really complicated or tricky, but trust me people, this chapter is the most beautiful chapters of people. I will tell you, I would say every single chapter of corporate and economic laws are extremely beautiful. If you understand this practically, every single chapter is beautiful. Every single chapter is beautiful in corporate and economic laws. Is everybody with me, guys? Everybody with me? Anuradha is from Chennai. Okay. Vanakkam, Anuradha. Eppadi irukkellinga? Gauri, Andhra Pradesh. Amazing, amazing, amazing. Perfect. So let's continue. Now, conversion of debt into equity will also be counted for calculating a total investment. Okay, very easy. Next, prohibited sectors for foreign direct investment, which means what? Yesterday we studied FEMA laws. Over here we are going to study foreign direct investment, which means what? People outside India where they cannot invest, which all sectors they cannot invest in India, and most important, why can't they invest in these sectors also? We're going to understand over here, which makes it super interesting. Rajita, amazing, Andhra Pradesh, superb. Okay, so number one prohibited sector is lottery. I told you not to promote gambling. This rule is made. What rule is made? Foreign direct investment is prohibited in lottery business, including government, private lottery or online lotteries. Number two, gambling and betting. Same thing yesterday we learned. Number three is chit funds. Chit fund is again prohibited, but for some people chit fund is allowed. But under what condition we'll understand. Chit fund is allowed for people. Who are those people? NRIs and OCIs it is allowed. Over here, non-repatriation basis word is used. What is meant by non-repatriation basis means what? Once these people invest into chit funds over India, if they earn a lot of profit, they cannot take that money outside India, is meant by non-repatriation basis. Now, what is the difference between NRIs and OCIs? NRI means NRIs are Indian citizens who are living abroad. OCIs are foreign citizen foreign citizen of Indian origin is meant by OCI. Another difference is NRIs can vote in India, OCIs cannot vote in India. Very easy. So basically these people can invest into chit funds provided they cannot take that money out of India. Easy. Next, Nidhi company, foreign direct investment is prohibited in Nidhi company. Next is trading in the transfer development rights. What is meant by transfer development rights? Let's quickly understand this. People, imagine I own a land of, let's say 5-acre land I own. Another person owns 5-acre of land. This is A, this is B. Government has given me permission to build how many floors? 5 floors I can build. Government has given me permission to build 5 floors, but I only build 3 floors. I have the right to build additional 2 floors. I have the right to build additional 2 floors. Now, this right, I can sell it to a person B for, let's say, 1 CR, 2 CR. Okay, basically transferring, developing rights to a person is called as trading in transfer development rights. Let's say this person is only allowed to build 5 floors. He wants to build additional 2 floors. Then what he will do is he will purchase this right from me by paying an amount. Now this rule says that foreign people cannot trade in the transfer development rights. Foreign people cannot trade in transfer development rights. Why, people? Can you think of reason? Why can't foreign people do this transfer TDR trading? Can anyone tell me? Just use your logic. Imagine if Jeff Bezos, Elon Musk, everybody start trading in transfer development rights. Then what will be the scenario in India? Can you think of the situation? Can you think of a situation? Can you tell me what will happen if people who have got crores and crores and crores of money, Bill Gates, Elon Musk, Mark Zuckerberg, if these people start trading in transfer development rights in India, what will happen? If these people keep on purchasing TDR from those who have the right to build flows, what will be the scenario in India? Can you think? Okay, I will tell you guys. What will happen is, buildings are usually like this. Buildings are usually very clean and neat. Now, if so many people start doing trade TDR, if so much amount of foreign investment is received for doing TDR, what will happen is, buildings will become like this suddenly. Buildings will become like this. It will basically create a havoc in the urban policy. It will create a havoc in the urban planning policy. If we give access to foreign people in doing TDR, it will totally create a havoc. It will mess up the urban planning. Understood, guys? That is the reason why these people, foreign people, cannot do trading in the transfer development rights. Understood, guys? Is everybody with me? Is everybody with me? Give me a quick thumbs up. Give me, send me a heart. Yes, perfect. Next. Real estate business or construction of farmhouses is also not allowed. FDI is prohibited in real estate business and in construction of farmhouses. Basically, foreign people cannot do business in real estate or farmhouses. But over here, exemption is given. What is the exemption? Foreign investments allowed in development of township, development of residential commercial premises, infrastructure projects, real estate investment trust regulated by RBI. People, if you observe these 1, 2, 3, 4, over here development word is used, but over here business word is used. So these people cannot do business in this sector, but these people can contribute, these people can invest to develop the residential premises, which means what? These township, what is meant by township? Township means, people, everything is already planned. How many floors building will be constructed? Where will be the hospital be located? Where will the school be located? Every single thing is properly planned in the township. So these people cannot create havoc in the urban planning no matter what. Hence, for that reason, over here FDI is allowed. But in development of residential commercial premises also allowed. Why? Because it is development and not business. There is a very big difference between doing business and doing development. Development means what again? Everything is properly planned. These people are just investing. Correct? Infrastructure projects, this is for public benefit, allowed. Real estate investment trust, again, investment vehicle. Everything is properly planned. They just have to invest over here and they will return income. That's completely allowed. Okay, that's why it is categorized as exemption over here. People, now did you understand? Yash Munga, there is no exemption to invest in Nidhi company, Yash. Next, manufacturing of cigars, cheroots, cigarillos, cigarettes or tobacco is again prohibited because to promote to promote health awareness. FDI in these sectors are not allowed. Next, activities sectors not open to private sector investment, which means what? Atomic energy, railway operations are not allowed. Over here, FDI is not allowed. Next, investment by citizens of Bangladesh, Pakistan or entities incorporated in Bangladesh or Pakistan. Also, it will require a prior government approval. Otherwise, it is not allowed. Next, investment by Pakistani citizens or entities. Pakistani citizens, we know now what is the situation in India and Pakistan. So Pakistan over here, they cannot invest in defense, space, atomic energy and other prohibited sectors. Investment in other sectors is allowed, but only with prior government approval. Am I clear, guys? Am I clear? Let's quickly try to revise everything. Number 1 is lottery business. Number 2, gambling. Number 3, chit fund. Number 4, Nidhi. Number 5, TDRs. Number 6, real estate business and construction of farmhouses. Exceptions are development of township, development of residential commercial premises, infrastructure projects, real estate investment trust. Number 7, manufacturing of cigars, churros, cigarillos, etc. Activities or sector that is not open to private sector like atomic energy, railway operations, except in permitted activities like railway infrastructure projects. Number 9, investment by citizens of Bangladesh or Pakistan or entities incorporated in Bangladesh or Pakistan, not allowed. It is only allowed when you get prior government approval. Number 10, investment by Pakistani citizens or entities. That's it. Are we clear, people? Are we clear? Just give me a quick thumbs up. Yes, people. Just give me a quick thumbs up if you understood whatever I have taught you. People, every single rule you have to understand using logic. Then only law will be exciting to you. Otherwise, law will be super boring to you. If you understand law, why this provision is made, then it will also improve your problem solving skills. Problem solving skills means what, people? Government has found out a problem. Now the solution is to make a law to solve that problem. So you need to understand what is government exactly thinking to solve that problem. And that is what we are studying, people. Law, basically. Problem solving skills from the government. Understood? Understood? Perfect, people. Yes. Let's move on to the next concept. Capital instruments. Very easy. Capital instruments means what? Equity shares, debentures, preference shares, share warrants. Share warrants means what? Right to purchase shares at a predetermined price is called as share warrants. Number 5, fully convertible debentures. Number 6, fully convertible preference shares is meant by capital instruments. Now, if Jeff Bezos want to invest in the capital instruments, what all conditions you have to comply with? Upfront payment, which means what? 25% total consideration must be paid immediately. I am giving my shares, I am issuing shares for 100 rupees. Jeff Bezos has to contribute minimum 25% upfront. He cannot say that I will only give you 10 rupees right now. Then after a few period of time, I will give you remaining amount. No. Jeff Bezos has to compulsorily give me 25%, that is 25 rupees. Balance payment he has to give me within 12 months. Understood? So there are two routes. Entry route, entry route means what? No government approval will be required. Or government route means what? That route where government approval is required. That sector where government approval is required. In automatic route, no approval is required. In government route, it will require government approval. Understood, guys? Perfect? Yes. Now, next is what are the sectoral caps in the foreign investment. People, we are also going to study Competition Act 2002. I'm going to teach you some mind-blowing case studies, mind-blowing examples in this lecture that, you will feel as if, why did not I study Competition Act properly? This regret you will have after this marathon, people. Is everybody with me, guys? Just give me a quick thumbs up. Next, sectoral caps on foreign investment. What are the sectoral caps in the foreign investment? Number 1, general rule says that foreign investment is allowed in sectors which are not prohibited. It is allowed. But what this automatic rule says is that you can invest in sectors which are not prohibited, but provided you have to follow certain rules and conditions. You have to report to RBI. that amount, that number of conditions you have to comply with. Okay, it's not like just because automatic route, just because, hi Benny, how are you, where are you from, just because in automatic route I'm saying just because a sector is not prohibited, that does not mean that investors can invest amount, they can suddenly leave, they can invest as per their whims and fancies. No, they can invest, no problem, but you have to comply with certain rules and regulations. That is called as automatic route. Understood, people? Now, number one is foreign investment limit. Number two, minimum capital requirement. People, listen to this very, very carefully. Over here, you may get confused. Required in some sectors, minimum capitalization is required for foreign investment, which means what? Some sectors require that minimum. If Jeff Bezos want to invest into this sector, he has to get minimum XYZ amount of money. That is meant by minimum capitalization requirement. Jeff Bezos, if he wants to invest in a sector, particular sector requires minimum cap requirement. So if Jeff Bezos wants to invest in that sector, he is required to bring minimum amount of capital. Below that, he cannot invest in that sector. Understood, guys? Now, what is counted? Now, let's say Jeff Bezos has contributed 10 crore rupees. Now, in this 10 crore rupees, what is counted towards minimum cap requirement and what is not counted towards minimum cap requirement? We are going to understand. Face value of shares is counted. Number two, premium additional amount above face value is counted. What is not counted? Amount paid above original issue price when shares are resold, which means what, people? Let's say XYZ has issued shares to a person who is, let's say this is Joe's Butler. Okay, Butler has brought in how much? Butler has bought 10,000. Butler has paid 10,000 rupees for one share. Let's take example of one share only. Now, apart from this, he has also paid premium. Let's say 5,000 rupees he has paid premium. This is face value. So, 15,000 rupees will be counted towards minimum capital requirements. Now, what will not be counted towards minimum capitalization requirement? Is Joe's Butler, after 1 year, sells these shares for, let's say, 30,000 rupees. Then, above 15,000 rupees, that is 15,000 rupees will not be calculated towards minimum capital requirement. Because basically, if Josh Butler sells these shares to, let's say, Shane Vaughan for 30k rupees, that means what, people? Is any money coming to the country? Sorry, is any money received by a company? No. XYZ company has not received any money when Josh Butler has sold these shares to Shane Vaughan. Okay. Shane Vaughan minimum capital requirement, minimum capitalization held in company is 15,000 rupees. So anything above 15,000 rupees will not be calculated towards minimum capitalization requirement, because money is not received by a company at all. Then why would it be calculated towards minimum cap requirement? Understood, guys? Did you understand the logic? Face value of shares will be counted, premium will be counted. Now, what is not counted? Amount paid above the original issue price when shares are resold will not be counted towards minimum capitalization requirement. Is everybody with me, guys? Just give me a quick thumbs up if you understand. Next, foreign investment in non-banking financial company. So there are two situations. Number one situation says if investee company is an NBFC. What is meant by investee company? Investor is Jeff Bezos. Jeff Bezos, if he is investing in my company, that means I am the investee company. If Jeff Bezos is investing in my company, Jeff Bezos is the investor and I am the investee. So if I am an NBFC, investee company is an NBFC, foreign investors can invest up to 100% without government approval, regulated by RBI. The reason is, people, tell me why. Why is this made? Why is this rule made? If investee company is an NBFC, no government approval is required. The reason is, people, because I am already regulated by RBI. RBI already controls me. Then I will not be required by, I will not require approval from the government, because I am already controlled by RBI. So my every action is supervised by whom? RBI. If I am not an NBFC, which means what? I am not regulated by anyone. In that case, I will require government approval. Did you understand the logic, people? Just give me a quick thumbs up if you understood my logic. People, if you learn like this now, people, trust me, you will never ever forget the law. Tomorrow, if you become a cost accountant after clearing the final exam, you should be able to command that knowledge before anyone who is talking to you. Okay, you should not say that, yeah, I studied this law, it was amazing. You cannot, you have to talk about that law. You have to explain that law to the person in a practical manner. That creates an amazing impression in the person's mind. Perfect. Rahul, Kanchan, Sakshi, Abhinata, perfect, guys, perfect. Yes. Now, what are the, now that we have understood where can person resident outside India cannot invest in, now we'll understand where all can they invest in. Number 1, capital instruments of an Indian company. Foreign investors can buy or sell shares, debentures of Indian companies. Okay. Number 2, capital instruments of a listed Indian company. Over here, listed word was not used. Over here, listed word is used. Which means what? Over here, FPI word is also used, which means FPIs can trade shares of listed Indian companies on stock exchange. Very easy. Number 3, capital instruments of listed Indian companies by whom? By NRIs, OCIs on repatriation basis. Repatriation basis means what, people? Basically, if these people invest in Reliance, if people make profit, they can take this profit to their country, home country. This is meant by capital instruments of listed Indian company by NRI and OCIs. Next, capital instruments or contributions to LLP firm. NRIs and OCIs can invest in LLP or firm, but not on repatriation basis, but on non-repatriation basis, which means what? They cannot take money back to their home country. Next, other securities. Foreign investors can buy or sell bonds, government securities, etc. No problem. Next, investment in LLPs. Foreign investors can invest in LLPs. FVCI, foreign venture capital investment. Investors can invest in India. Investment in investment vehicles, again allowed. Foreign investors can invest in properties like real estate or infrastructure trust. Issuance of depository receipts. Foreign investors can issue DRs. Indian depository receipts. Foreign investors can buy or sell IDRs. Which means what, people? If foreign investors can issue DRs, which means what? Elon Musk is issuing depository receipts. Over here, Indian depository receipts. Foreign investors can buy or sell Indian depository receipts. Understood, guys? So 10 points. People, this will definitely come in your exam. This will definitely come in your exam. Question will be asked. They will give you a case study and you have to tell whether this investment is allowed or not. Understood, guys? Perfect. Now, acquisition through right issue or bonus issue, which means what? Jeff Bezos, if a company offers new shares to existing shareholders, usually at a discount in proportion to their current holdings, it is allowed. Which means what? Jeff Bezos has invested in my company, right? Now, what I do is I give shares on right issue basis, which means what? I raise additional capital, I issue new shares, but I will give shares to Elon Musk at a discount is meant by right issue. Bonus issue means what? I give the shares for free is called as bonus issue. Next, ESOPs and set equity shares can also be given to Jeff Bezos. Foreign investors can invest in right issue or bonus issue of Indian companies following the applicable regulations. No problem. Jeff Bezos can invest in Indian companies based on right issue, based on bonus issue, and Indian companies can also give him ESOPs or set equity shares. Is everybody with me? Just give me a quick thumbs up, guys. Just give me a quick thumbs up. Sakshi, Rahul Kanchan, Abhinetra, Chandrasekhar, Gopal, Gauri. That's amazing. Amazing, guys. Amazing. Okay. Let's move on to the next topic. Issue of convertible notes. What is meant by convertible notes? A loan issued by a company that can later be converted into equity shares are meant by convertible notes. Very easy. Loan later convertible into equity shares is meant by convertible notes. Now comes the important question. How much investments can foreign investors can make in convertible notes? Foreign investors can invest up to how much? 25 lakhs in convertible notes issued by Indian startups subject to regulation. They have to follow rules and regulation, but they can maximum invest how much? 25 lakhs in convertible notes. Convertible notes means loans convertible into equity shares. Next, merger, demerger, amalgamation. What is meant by merger, people? Vodafone Idea, they merged is called as merger. Demerger means what? Two companies getting split is called as demerger. Amalgamation means what? Two companies, now they are forming a one company where all the companies cease to exist is called as amalgamation. But in merger, all companies exist, but in amalgamation, all companies do not exist. Bank of Maharashtra and Dena Bank. It was an amalgamation. Understood, guys? Perfect? Yes. So in case of merger, amalgamation, demerger, when foreign investors receive shares, it is absolutely allowed, no problem at all. But provided where sectors require government approval, they have to get a government approval. Example, defense and media. In defense and media, if because of merger, demerger, amalgamation, if foreign investors are getting shares, they have to get shares. They can get shares, but after government approval only. Are you guys with me, guys? Perfect? Perfect? Is everybody with me? Yes. Now, calculation of total foreign investment in Indian companies. What is meant by calculation of total foreign investment in Indian companies? Conversion of debt into equity will be calculated. Obviously, we have understood this. Number 2, foreign currency convertible bonds and deposited receipts which are linked to debt instruments are not counted in the total foreign investment. Why, people? Tell me why. What is meant by foreign currency convertible bonds? That bonds which are in foreign currency, which can be later convertible into equity shares, is meant by foreign currency convertible bonds. Now, people, until and unless that foreign currency convertible bonds are not converted into equity shares, it will not be considered as foreign investment in Indian companies, because they do not represent the shares the same way deposited receipts are investment indirectly in shares. If they would have been directly, it would be considered as foreign investment. But what is meant by deposited receipts? Basically, what? KitKat wrapper is changed and the foreign wrapper is given. So it is an indirect way of purchasing shares is meant by deposited receipts. Hence, that also do not represent actual ownership of shares. Hence, it cannot be classified as, it cannot be taken into calculation of foreign investment in Indian companies. Is everybody with me, guys? Just give me a quick thumbs up. Yes, people. Okay, perfect. Let's continue. Next is downstream investment. What is meant by downstream investment? Downstream investment occurs when a company or the subsidiaries invest in other companies is meant by downstream investment. Now, foreign investment in the company making the downstream investment is also counted. What is meant by this, people? Which means A is an Indian company. It has invested into another Indian company, but A has already received 25% investment through foreign portfolio investment. So what, people? It will be this rule says that this B company has received 25% foreign portfolio investment, even though it has actually not received any foreign portfolio investment, but because the investor, that is A, is already holding 25% foreign portfolio investment. If A is investing into B, which is also an Indian company, both are Indian companies, still it will be told as B holds 25% foreign portfolio investment. Next, if the company making the downstream investment, which means what? Flipkart holds foreign investment through Walmart. Walmart owns shares through foreign portfolio investment, which means what? Through shares, stocks, bonds. This investment as of 31st March of the previous financial year is used for calculating the total foreign investment in the investee company, which means what? If Flipkart invest in Myntra, it will be told as Myntra, even though it has directly not received any foreign portfolio investment, but still it will be considered as Myntra has received foreign portfolio investment. Understood, guys? This rule is only made to avoid unnecessary confusion and calculation again and again. Okay. So if an investor company which holds foreign portfolio investment, if the investor company invest into some other company, even though this company has not received any foreign portfolio investment, still this will be considered as this company holds foreign investment. This is meant by downstream investment, people. The same thing applies to wholly owned subsidiary company. For a wholly owned subsidiary, the foreign investment received by the subsidiary is limited to the foreign investment received by the parent company making the downstream investment. This is meant by same example. Clear? Is everybody with me, guys? Just give me a quick thumbs up. Next, conditions for exit for foreign investment in India. Which means what? Jeff Bezos has invested into my company. Now, if he wants to sell these shares, now how can he sell that shares? We're going to understand right now. Number one, right of first refusal, which means what? The Indian partner has the right first option to buy the shares if a foreign investor wants to exit. If the Indian partner refuses, the foreign investor can sell it to a third party. Which means what? That Jeff Bezos wants to sell the shares to a foreign person or any other person. First, he has to give me the opportunity to buy the shares. If I refuse, then only he can give it to the third party. Then only he can sell it to the third party. This is meant by right of first refusal, which means what? I have the right of first refusal. Jeff Bezos, if he is a partner in my company, tomorrow he wants to exit that company. Now, if he wants to exit that company, he will sell the shares, obviously. Now, he cannot sell the shares directly to the third party. First, he has to make an offer to me that, Balgopal, do you want to buy the shares? If I say yes, he will sell the shares to me. If I say no, then only he can sell it directly to the third party. Otherwise, he cannot sell the shares directly to the third party. Number 2, pricing of shares. People, this is very, very interesting. Okay, understand this very, very carefully. We're going to understand the logic over here. Pricing of shares. For unlisted companies, an independent valuation is required to set the price. Which means what? At what price are you going to sell the shares? For if that company is unlisted company, an independent valuer has to be appointed to set the price. The investor must follow all the capital gain tax and laws when selling the shares. Now, transfer of capital instruments. Now, this is very, very interesting, people. When foreign investment is involved, Indian companies with foreign investment must follow specific rules for transferring shares. Indian companies with foreign investors have to follow specific rules and conditions while transferring the shares. Now, what are those conditions? Number 1, if the share is getting transferred to a foreign resident, no condition have to be followed. No pricing guidelines for transfers to someone living outside India, but reporting requirements must be followed by using the form FCTRS, which means what? Jeff Bezos wants to sell the shares to Mark Zuckerberg. There is no pricing guideline that has to be followed, but we have to make a reporting that Mark Zuckerberg has received XYZ number of shares. No pricing guidelines have to be followed. But if Jeff Bezos sells these shares to a Indian person, then pricing guidelines have to be followed. Can you think of a reason why is this rule made? This rule is made so that it would be very, very easy to attract foreign investment. If we add a lot of rules, lot of conditions for selling the shares to Mark Zuckerberg, who's a foreign resident, then he will not obviously purchase the shares because there is a lot of headache. You have to follow the pricing guidelines XYZ. So people, if we put a lot of conditions and rules on Mark Zuckerberg to purchase the shares, he will not purchase the shares. But if a person is selling the shares to an Indian person, then he has to follow the pricing guidelines. Easy, people. Exemption for certain companies. Indian companies with foreign investment. If an Indian company is controlled by foreign investors, pricing guidelines may not apply. Which means what? Indian company which is controlled by foreign investors, pricing guidelines does not have to be followed. Why? Same logic. To attract foreign investment so that foreign people can very easily, very comfortably invest in India. Is everybody with me, guys? Just give me a quick thumbs up. We are done with the FDI chapter. Now we're going to understand expected question, then we'll solve the MCQs. Is everybody with me, guys? Just give me a quick thumbs up. Yes. Perfect. Gauri, Veni, amazing, guys, amazing. All right. Now let's understand what all expected questions that can be asked in the exams. Number 1, explain the key provisions of foreign direct investment in India, including the criteria for FDI, sectoral caps, and the process for repayment of capital instruments. Charan Sai Sasanapuri. Hi Charan Sai, where are you from? So people, this question can be asked in the exam. So what you have to tell, what is the FDI criteria? You do not have to get scared by reading the question, people. First thing, keep this in mind. That's the reason why whatever expected question that I have made is super difficult. It will definitely create a fear in your mind. Okay, do not be scared at all. First things first, do not be scared at all. Whatever question is going to be asked in the exam, you all have studied the content, you all know the content, you all remember the content very well. It's just that you are scared. Okay, you don't have to get scared. Okay, just ask yourself one question: what is this question exactly really asking me? Then you will get the answer. So very easy. FDI criteria: if an unlisted company, investment allowed; listed company, 10% or more of paid up cap equity, fully diluted basis, we understood. Continuation of FDI: if foreign investment shareholders fall below 10%, still it will be considered as FDI. Sectoral caps: 100% FDI is allowed in non-restricted sectors. For restricted sector, government approval is required. So easy. Payment for capital instruments: we know 25% payment should be made upfront. Remaining have to be paid within 12 months. Entry route can be automatic route, government route. In automatic route, no prior approval is required. In government route, prior approval of government is required. So easy, guys. Next, discuss the sectors where FDI is prohibited in India. Also explain the exemptions, if any, in the real estate sector and other sectors where foreign investment is restricted. You have to tell all the prohibited sectors. Then exemptions. What are the exemptions? We understood real estate. Development is allowed, but business is not allowed. Commercial properties, infrastructure, road, bridges, real estate investment trust, regulated by RBI. Next, describe the conditions for exit from a foreign joint venture in India. How are the shares priced, transferred when a foreign investor exits? Discuss the process and the implication for both foreign and Indian resident. First right of refusal, we understood just now. Pricing of shares, unlisted companies, independent valuation is required. For capital gain tax applicable during sale. Transfer of shares, we understood. Foreign resident, no pricing guidelines have to be followed to attract foreign investment from Mark Zuckerberg. Indian resident must follow pricing guidelines. Simple. 7 marks. So easy. Is everybody with me, guys? Now tell me, do you find FDI chapter or FEMA laws little difficult or little boring? Tell me, people. If you understand this chapter with logic, it's super beautiful chapter. Quickly give me a thumbs up here, guys. Quickly give me a thumbs up. Charan Sai, you are from Andhra Pradesh. Amazing, guys. Amazing. Charan Sai, you did not come yesterday. Why? Charan Sai was not there, and Veni was not there. Gauri was not there yesterday. Tejasvi Pawar, yes. Abhinatra. Guys, are you ready for MCQs? Are you guys ready for the MCQs? Yes. The first MCQ is: what authority formulates and announces the FDI policy in India? Reserve Bank of India, Ministry of Finance, Department for Promotion of Industry, Internal Trade, Securities and Exchange Board of India. What is the answer for this question? Guys, I will tell you one again rule. You have to give me the question number and then you have to give the answer, okay? One answer is D, one answer is C. Tejasvi Pawar is saying one answer is C. Abhinitra is saying D. Gauri, what is the answer? Charan Sai, what is the answer? Veni. Rahul Kanchan says answer is D. Chandra Gopal, answer is C. Okay. So let's find out. Answer is, guys, C. Promotion of industry and internal trade. Now second question is, guys, under which act is the consolidated FDI policy is regulated. Companies Act, FEMA, Securities Contract Regulation Act, or Banking Regulation Act 1949. Quickly give me the answer, people. We'll solve 3 MCQs, then we will go to the next chapter. Two answer is B. Tejasvi Pawar is saying second answer is B. Sakshi Jalan, second answer is B. Okay. Answer is, guys, B. Perfect. Perfect, guys. Perfect. Next. What is the minimum threshold of equity holding that qualifies as a FDI in a listed Indian company? What is the answer for this? 5%, 10%, 15%, or 20%? Fantastic, Gauri. Fantastic. Your answer is right. Absolutely. 2B. Yes. Three answer is B. Three answer is B. Three answer is B. Yes. Perfect, Adi. Perfect. Perfect. Next. If a foreign investor shareholding in a listed Indian company falls below 10%, how is the investment classified? Is it FDI, FPI, or it requires reclassification through RBI? Give me the answer, people. After you give the answer, you send the answer. After you have sent the answer, just give me the logic. Why is this rule made? I told you guys, answer is C. It continues to be treated as FDI. Abhinitra, fantastic, Abhinitra. Amazing. Amazing. Perfect. 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 Next. Which of the following is not considered as an investment vehicle under FDI regulation? Tell me, guys, what is the answer for fifth? Venture capital fund. Perfect, guys. Perfect. Perfect. Amazing. Amazing. What is the logic, guys? I told you. The three investment vehicles, the goal is to generate stable returns and not profit. But venture capital fund is only for profit motive. Hence, it is not classified as an investment vehicle. Yes, Gauri, Sakshi, Rahul, Tejasvi, Abhinitra. Perfect, guys. Perfect. Amazing. With this, let's take 5 minutes break and then start with the next chapter, that is liberalized remittance scheme. After that, we will talk about external commercial borrowing. Yes, Gauri. Yes. Fantastic. Fantastic. Guys, now tell me, are you finding FEMA super interesting? Yes, sir. Yes, yes, yes. Amazing. Okay. Perfect. Hey, Siri. 5 minutes timer.
5 minutes starting now.
Guys, tell me one thing. Which is the chapter that you find the most boring chapter that you will always touch in the last? Tell me, which chapter do you find the most boring chapter in the corporate and economic laws? FEMA, banking and insurance. Oh my God. Abhinetra, you are finding investment and loans. Okay. Okay. Guys, this is my guarantee that after this 7 days marathon, Abhinetra will not find banking, insurance, and after we complete the FEMA, boring. Gauri will not find investment and loans chapter boring. Sakshi Jalan, banking and insurance, you will never find it boring. This is my promise. Tejasvi Pawar, Chandrasekhar Gopal, Tejasvi Pawar, which chapter do you find it boring? Are you finding everything super interesting? Chandrasekhar Gopal, insurance is boring. Okay. Guys, I'm going to tell you, insurance is such a beautiful chapter that when I will teach you insurance in the marathon, your mind will completely get blown away. This is my promise. Rahul Kanchan, which chapter do you find it boring? Rahul Kanchan, Tejasvi Pawar. When we will be starting Companies Act. Abhinetra, from tomorrow onwards, we're going to start Companies Act. From tomorrow till day after tomorrow. Our goal is 2 days, we're going to complete off with the Companies Act thoroughly. Tejasvi Pawar, PMLA. Okay. Okay. Perfect. People, let's start the next chapter, that is Liberalized Remittance Scheme. Very sweet, very short chapter, super easy. Liberalized Remittance Scheme. Yes. So, Liberalized Remittance Scheme is, people understand this one thing, Liberalized Remittance Scheme is only and only applicable for individuals like you and me. Companies, firms, body corporates do not have any, for them, Liberalized Remittance Scheme is not at all applicable. Only for individuals, Liberalized Remittance Scheme is applicable. Okay, it's basically a benefit for individuals like you and me, where we can remit $250,000 maximum to foreign countries. Okay, for what purposes we can remit, for which purposes we cannot remit, we're going to understand in this chapter. Okay, with this, let's start Liberalized Remittance Scheme. Perfect. People, what are the prohibited items under the scheme? Where all can you not use the $250,000 when you go out of country? You cannot remittance in prohibited activities, lottery, prescribed magazines. I told you yesterday what is meant by prescribed magazines. Those magazines which creates hatred, which creates terrorism in the minds, which creates anxiety, which brainwashes people. Those banned magazines, for that purposes you cannot use for you cannot remit foreign currency. Understood, people? Number 2, remittance for margin calls to overseas exchanges. What is meant by margin calls for overseas exchanges? I hold my trading account with a foreign broker. That foreign broker requires me to deposit minimum amount. For that purpose, I cannot remit foreign currency. Number 3, remittance for purchase of foreign currency convertible bonds in the overseas secondary market. People, for foreign currency convertible bonds are only issued so that companies can raise money from the foreign people. So if over there also, if Indian people start purchasing foreign currency convertible bonds, that does not make any sense. Hence, remittance for purchase of foreign currency convertible bonds is also not allowed. Number 4, remittance for foreign exchange trading. I am trading in foreign exchange. For that purpose, I am remitting money, not allowed. 5th, remittance to non-cooperative countries. Who are non-cooperative countries? Classified as FATF, which means what? Iran and Myanmar are FATF classified non-cooperative countries. Next, remittance to individuals or entities with terrorism risk. Pakistan, not allowed. Okay, so in 6 areas you cannot remit foreign currency. Prohibited purposes, margin calls, foreign currency convertible bonds, foreign exchange trading, non-cooperative countries classified as FATF, individuals or entities with terrorism risk. Okay, next, what is the facility that is available to resident individuals under LRS? Resident individuals can avail foreign exchange under LRS for the following purposes. What are the purposes? Maximum limit is $2,50,000 you can remit. Now, for what all purposes can you utilize this money? Let's understand. Private visits to any country except for Nepal and Bhutan. Number 2, gift or donation or charitable donation. Number 3, going abroad for employment allowed. Emigration, that is visa expenses and initial accommodation, you can use foreign currency. Number 5, maintenance of close relatives abroad. My father lives in UK, I live in India, so I can remit foreign currency so that my parents can take care of the expenses, allowed. Number 6, travel for business, conferences, specialized training or medical purposes, allowed. Number 7, expenses for medical treatment abroad, studies abroad, any other current account transaction that are not covered under the definition of current account in FEMA 1999. Remittance for other legitimate personal expenses not specified under FEMA, which means what? Apart from this, I can remit this money for any activity which is not prohibited under FEMA. It is allowed. As far as it is legitimate, it is completely allowed. So in 9 areas, I can use foreign currency to remit. Understood, guys? Is everybody with me? Just give me a quick thumbs up. Perfect. Next, what are requirements to be complied by the remitter under LRS? Number 1, choose one branch of an AD bank for all LRS remittances. AD category bank. I can remit money to my parents who are living abroad through a authorized dealer bank. Atul PS, welcome back Atul. So I can remit money to my parents who are living in US through an authorized dealer bank. Yesterday we understood, people, no person can deal or purchase or sell foreign currency except for authorized dealer. Yesterday we understood. Same authorized dealer is over here. So without an authorized dealer, I cannot remit any money. Number 2, bank account maintenance requirement. Must have a bank account with the chosen AD bank for at least 1 year before remitting under LRS. That means what? For 1 year, I have to maintain a bank account under AD category bank. Otherwise, what will happen is people will come to do this illegal activities. They will open a bank account on day 1, on day 2 they will start remitting amount. That is not allowed. For that purpose, you are required to maintain a bank account for at least 1 year in AD category bank. Number 3, the AD bank must check the remitter's purpose, source of funds and account history before processing the transaction. Okay, AD category bank has to check the remitter's purpose, for what purpose he is remitting money. Number 2, what source of income does he has, from where is he earning income. Number 3, he has to check all the account history, where all previous transaction I have made before processing the transaction. Number 4, permitted currencies for remittance. Remittance can be made in any freely convertible currency, USD, Euros, JPY, etc. Number 5, special approval for banks soliciting deposits for foreign entities. Can anyone tell me the meaning of special approval for banks soliciting deposits for foreign entities? Which means what, people? I will tell you. Which means what? Indian bank has a branch in US. Okay. Now this US branch, Indian people are using this bank to remit money. So what this law is saying, that bank must get RBI approval first to solicit deposit, accepting deposits for foreign branches or acting as agents for foreign services. This is the reason why it is made. Next, investment ratings under LRS, which means what is this rule is saying, that no specific credit ratings are required, but the investor is responsible for evaluating the investment's risk. No specific credit rating are required, but the investor is responsible for evaluating, which means what? Investor are on their own. For whatever purpose you are remitting the money, the risk is on you. You cannot blame any other bank, any other person, saying that you did not approve, you did not told me that credit rating of that person is very, very less. You cannot blame the bank for that. So if I am remitting money abroad, risk is completely on me. Okay. So 6 things. Number 1, designating an AD category bank. Number 2, bank account maintenance for at least 1 year. Number 3, bank should do due diligence. Number 4, permitted currencies for remittance. Number 5, special approval for banks soliciting deposits for foreign entities. Number 6, investment ratings under LRS. Is everybody with me? Just give me a quick thumbs up, guys. The last topic, that is loan facility under LRS for NRIs and PIOs. What is the difference between NRIs and PIOs? People, tell me quickly. What is the difference between NRIs and PIOs? In the last chapter, I told you the difference. What is the difference between NRIs and PIOs? Great, guys, great. Very amazing, Tejasvi Pawar, superb. A resident individual can give a rupee loan to a NRI or a PIO who is a close relative under following condition. Which means what, people? Indian resident, I am the Indian resident. I can give loan to my uncle who lives in US. Uncle is NRI or he can be PIOs. What are the conditions I have to comply when I am giving loan to my uncle? Loan must be interest free with a minimum maturity of 1 year. Which means what? Imagine if I start giving loans to my uncle at interest rate, that means I am commercializing the loan. I am making a lot of money from these loans. Because of that, I will start giving lot of short-term loans. It will again, one day when person defaults in repayment of that loan, it will create a havoc in the economy. Okay. If so many people start giving loans at interest rate, it will start creating a havoc in the economy. So you cannot charge any interest rate whenever you are giving loan to your uncle. Next, minimum maturity period of 1 year should be there. Otherwise, what will happen is, if I am giving loans for 6 months, 7 months, 8 months, my uncle will use that loan for what purposes? For short-term purposes like trading in stock market, for gambling, for betting. For short-term purposes, he will start using that loan, which is absolutely super wrong. For that reason, people, minimum maturity of 1 year is given, which means what? My uncle has to repay me the loan not before 1 year, but only after 1 year. This is meant by minimum average maturity period. Understood, guys? Did you understand the logic behind this rule? Now, will you ever forget this rule? Tell me, people. Number 2, loan must be within the overall LRS limit of USD $250,000. Obviously, we know this. LRS means maximum you can remit $250,000 without government's approval. Liberalization means what? Liberal means what? Free. So you can freely remit money up to maximum $250,000. Number 3, loan must be used for the borrower's personal expenses or business in India, which means what? My uncle cannot use that money for doing business or personal expenses outside India. That means what, people? My uncle has to be in India only. Then only I can give a loan to my uncle. He can use this loan for what purposes? For personal purposes or business purposes. Next, loans cannot be used for prohibited investments. Business is restricted for foreign investment. We know this. Loan amount must be credited to NRO account of NRI and PIOs. NRO means what? Non-resident ordinary account. These accounts are those where government completely supervises the transaction of this account, so that people do not misuse money that they receive from Indian people. This account is completely monitored by government. Hence, this rule is made. Loan amount cannot be remitted outside India. My uncle cannot remit this money outside India. Repayment must be made through inward remittance via normal banking channels only. I cannot use any other channel except normal banking channel, so that whatever money transaction happening, it is completely accounted, monitored and supervised. We are done with liberalized remittance scheme chapter, people. Did you find this chapter interesting, people? When you understand the logic, the chapter becomes super interesting. Did you find the chapter interesting after you understand the logic? Tell me, people. Tell me. Is everybody with me, guys? Give me a quick thumbs up. Thank you, Rahul. Thank you so much, guys. Abhinitra, Rahul, thank you so much. People, just promise me one thing. Tomorrow, whenever you come across any term, whenever you come across any rule, provision, always you will question yourself, what is the logic behind this provision? Promise me this, guys. Tomorrow you are going to become a cost accountant, okay? There is a difference between a lot of cost. Not all cost accountants are same, okay? There are cost accountants who have got tremendous amount of knowledge. There are cost accountants who do not have any knowledge. So question is, which cost accountant would you want to become? Knowledgeable cost accountant or cost accountant who only have knowledge about the CMA syllabus? I want you guys to be like water. Do not put any restriction on yourself that I will only receive knowledge, I will only learn about XYZ thing. Okay? Do not have this narrow scope. Be like water, guys. Wherever knowledge is coming from, just take it. You never know where that knowledge will be useful. Tomorrow, if you become cost accountant, if a company which is dealing in foreign exchange, multinational companies, if they want to hire you, they will definitely ask you XYZ questions. They will ask you questions on FEMA laws. They will ask you questions on FDI. Then when you explain the interviewer with this logic, people, tell me one reason why he will not appoint you. Yes, people, yes. So with this, let's begin solving our MCQ questions. Number one question is, people, what is the current maximum limit for remittance under the LRS scheme per financial year? Whether it is $50,000, 1 lakh US dollars, 2 lakh US dollars, or 2 lakh 50K US dollars. Answer is D. Perfect, Abhinitra. Perfect. Next. When was liberalized remittance scheme introduced? Okay, this question will not be asked in the exam, people. Yes. Which of the following entities can avail liberalized remittance scheme? Corporates. Oh, you remember Gauri knows the answer of second. 1D 2. Okay. The answer you were giving was 2,50,000 US dollars. Okay. Which of the following entities can avail liberalized remittance scheme? Corporates, partnership firms, resident individuals, including minors, or Hindu undivided family. Amazing, Mini. Amazing. Answer is C. Perfect. Which of the following countries is specifically excluded from private visits under LRS? Amazing, Gauri. Amazing. Gauri, Tejaswi, Pawar. Great, guys. That means you guys have superbly learned this chapter, people. Amazing. Commendable. Fourth answer is A. Nepal. Perfect. Perfect, guys. Perfect. Last question. Which of the following is a prohibited transaction under LRS? Purchasing lottery tickets, sending money for a child's education abroad, remitting funds for medical treatment, gift to a close relative abroad. What is the answer for this? Vidhi Jain. Hi, Vidhi Jain. How are you? Where are you from? Veni, Rahul Kanchan, Gauri, Tejasvi Pawar, Abhinitra. Great, guys, great. You all have answered correctly. Fifth answer, C. Gauri is saying A. People, my question is, understand very, very carefully. Which of the following is a prohibited, which means not allowed, transaction under LRS? Yes. Perfect, perfect, perfect. Purchase of lottery tickets. Very easy chapter, people. Hey, sir, I am from Raipur, Chhattisgarh. Great, Vidhi, great. Vidhi was not there yesterday, guys. Perfect, perfect. We have got a lot of new viewers today. Amazing. So, people, with this, let's begin our next chapter, that is external commercial borrowings. Amazing, Gauri, amazing. External commercial borrowings. Yes, yes, yes. People, before we dive into the rules and regulation part of external commercial borrowing, we need to understand basic parameters first. Number one parameter is minimum maturity period. What is meant by minimum maturity period? Tell me, people. Over here, loans must be taken for a minimum period. Example, 5 years. Over there, in last chapter also we understood minimum maturity period of 1 year. Over here, why is this rule made? To ensure long-term use. Did you remember the logic, people? Minimum maturity period is to ensure that loan is taken for a long-term purpose. If loans are taken for short-term purpose, definitely short-term purpose means what? gambling, betting, stock market, even if it is taken for a legitimate purpose, there is a risk of defaulting in that loans. If a lot of short-term loans are defaulted, it will destabilize the economy. This is the logic behind why every time we hear the term minimum average maturity period. Number 2, permitted and non-permitted end users. ECB funds external commercial borrowings. External commercial borrowing means Indian people, entities, companies raising money from foreign countries is meant by external commercial borrowing. ECB funds cannot be used for what purposes? It cannot be used for stock market trading or buying real estate. Okay, real estate word everywhere it is used. So ECB cannot be used for stock market or buying real estate. Where it can be used? It can be used for things like capital projects or refinancing of loans. So if I want to purchase a machinery, if I want to construct something, factory and all, I can do this while raising external commercial borrowing. Refinancing, what is the meaning of refinancing? Can anyone tell me the meaning of refinancing, guys? What is meant by refinancing? What is meant by refinancing? People, whenever I ask a question, I want you to answer in shortest form possible. What is meant by refinancing? Okay. People, refinancing means raising loans to pay off earlier loans. Raising new loans, yes. Raising new loan to repay old loan is meant by refinancing. Tell me, why is refinancing done? What is the logic behind refinancing? Why would I take a new loan to pay off the old loan? Financing again with lower rate of interest. Perfect. Vidhi and Tejasvi Pawar, amazing guys, amazing. Answer is, year 1, I took a loan at 20% interest rate. Year 2, interest rate has been 10%. So obviously what I will do is, I will take loan on year 2 to pay off year 1 loan. Because of low interest rate, I am raising new loan to pay off the old loan. Overall cost of capital is getting reduced. Now instead of paying 20% interest rate, I only have to pay 10% interest rate. Did you understand the logic, people? Yes. What is the minimum all-in cost ceiling? Minimum all-in cost ceiling means what? All the expenses that will be taken into consideration while you raise the loan. Interest plus fees of raising ECB must stay within the set limit. Which means what? Tomorrow, if I raise new loan, I should ensure that whatever costs are incurred, whether it is interest, whether it is processing charges, whatever cost is incurred, it should be below the ceiling limit. It should be below the ceiling limit. Rahul Kanchan, perfect bro, perfect. Next, ECB in corporate insolvency resolution process, which means what? Companies into insolvency process. Can they raise ECB is the question. If yes, how? If no, why not? We're going to understand in this topic. Companies going through CRP can raise ECB to repay their existing rupee loan. Which means what? I have got 10 crores rupee loan outstanding over here. I do not have any money. So what I will do is, I will go to I will go to US. I'm sorry, I will raise money from US, UK, Australia, wherever possible. I can raise money. Who can borrow? Resolution applicants, buyers trying to revive the company can only borrow. There's a difference between a resolution applicant and a corporate debtor. Okay, we are going to understand this in corporate insolvency resolution process. There's a difference between a resolution applicant and a corporator. Resolution applicant, who is the resolution applicant? Resolution applicant is basically the savior of a company. Savior company. He revives the company. So, resolution applicants, buyers trying to revive the company, resolution applicants can borrow ECB. Yes, who cannot lend? That means what? Who cannot give ECB? Foreign branches or subsidiaries of Indian banks cannot lend ECBs. The logic behind this is already companies into insolvency. Now, another Indian company, if they start giving loans to Indian companies again, and these companies are not able to manage that loan very well, then instead of one Indian company going in debt, two Indian companies will start going in debt. So that should not be a case. Okay. So who cannot lend? Foreign branches or in subsidiaries of Indian banks cannot lend. People, did you understand the logic behind the rules that I am explaining to you? Special rule. ECB during CRP requires government approval. It's not automatic. Yes, this is important. ECB during CRP will require government approval. It's not automatic. Is everybody with me, guys? Is everybody with me? Vidhi Jain, Rahul Kanchan, Tejasvi Pawar, Abhinetra Gaudi, Atul PS. Is everybody with me? Next topic, end users. Where can ECB cannot be used? Where ECBs cannot be used? Which means what? Today I raise a lot of US money, UK money, lot of money. Where all can I not use? ECB cannot be used for the following purposes. What are the following purposes? Real estate, we know this. Yes. Real estate is very common term now. Investing in capital market, stock market I cannot use. Number 3, equity investment, using ECB to buy shares of another company. I cannot do that. Otherwise, I will also start raising ECB to purchase Reliance company shares. I will also use ECB to purchase lot of company shares. Not allowed. Number 4, working capital, day-to-day business expenses. For that purpose, I am raising ECB. Not allowed, but allowed only in some special cases. It is allowed. Next, general corporate purposes, broad business use allowed only in some special cases. So for business purposes, general corporate purpose, for paying of salary, from paying salaries to my employees, I am using ECB. Not allowed, but only allowed in special cases. Repaying rupee loan, paying old Indian loans, allowed only in special cases again. On lending to restricted sectors, NBFCs can't use ECB to lend for banned activities except in special cases. NBFCs cannot use ECB to lend for banned activities. Perfect. So prohibited use, real estate, investment in capital markets, equity investment, working capital, corporate general purposes, repaying rupee loans. Number last is on lending to restricted sectors. In special cases, some of these uses are allowed under conditions. NBFCs can raise ECB for allowed on lending activities if they meet the required conditions. That means what? NBFCs can raise ECB provided they invest in the right place and not in the restricted places. Next, limit and leverage for ECB. How much maximum ECB can you raise without RBI's approval? Maximum is US dollars 750 million per year can you raise maximum. 750 million per $750 million US dollars in 1 year or in 3 to 4 years can you raise? Tell me, people. Tell me the answer for this. $750 million you can raise in a period of 3 years, 4 years, 5 years, or every year can you raise $750 million. Atul, Gauri, Vidhi, Rahul, Tejasvi, quickly answer me, guys. Every year. Perfect, Gauri. Perfect. Every year. Now next. If the company is borrowing in foreign currency from its foreign shareholder, then the loan to equity ratio should not be more than 7:1. Siddesh today, thank you so much. If the company is borrowing foreign currency from its foreign shareholder, the loan to equity, that means debt to equity, should not be more than 7:1. The reason is, if the company takes a lot of loans, company takes so much loans that it is more than the money it has got, then there is a possibility that the company can default in repaying that loan. Hence, company cannot borrow beyond their capability. That is why this rule is made. Loan to equity should not be more than 7:1. Perfect, Ishwarya. Perfect. Now, there is an exception to that. There is an exception to this rule that says that loan to equity should not be more than 7:1. There is an exception to a rule that says company cannot borrow beyond its capacity. Can you guys tell me what is that rule? What is that exception? Exception is, guys, exception is if total ECB is just 5 million US dollars or less, then 7:1 rule does not apply. The loan amount is so small that this rule does not apply. 7:1. The possibility is very, very less for the company to default in a small amount of loan. Simple logic. Company must also follow any debt equity rules set by the sectoral regulators. So if company wants to raise ECB, how much can it raise? Maximum $750 million per year. If they are borrowing from a foreign shareholder, the loan to equity should not be more than 7:1. Exception is if the company raises how much? $5 million or less, small amount, then this loan is to equity rule does not apply. Last and the most sweetest rule is debt equity rules set by the sectoral regulators should be followed. Very, very easy. Very, very easy, guys. Is everybody with me? Give me a thumbs up or give me a heart. Send me something, guys. Perfect, Gauri. Perfect. Perfect. Next. Parking of ECB proceeds, which means what? Now that I have raised ECB, now that I have Atul PS, you send an amazing emoji, bro. Atul PS is not replying, he is just sending this emoji that says like this thing. Okay, Atul, thank you so much. Tejasvi Pava, thank you so much. Aishwarya, thank you so much. Veni, thank you so much for that gift emoji. Okay, now that I have raised ECB, where can I park it? if it is in India or if it is foreign. How can I park it? Where can I park it? Park it means where can I basically keep it is the topic. Parking abroad for foreign currency expenses. If the ECB is to be spent in foreign currency, it has to be kept in abroad. People, the logic is, if I want to invest in abroad, why would I bring that ECB into India and then again use the conversion process? There are a lot of approval process, conversion process involved. So why would I bring the ECB over here? So might as well I keep that ECB in foreign country as well, foreign country itself. It can be kept abroad, but it has to be kept in safe liquid assets like short-term deposits or government bonds until required, because these are the safest investments. I cannot use that money into investing in stock markets and all. That is risky. I have to keep that ECB that I have raised in a safe investment. Safe liquid assets, looking like short-term deposits or government bonds. Why? Because it saves on currency conversion banking charges. Easy. Next, now that I have raised ECB from foreign country, now I want to bring it into India. Then where do I park it is the question. The ECB money is to be spent in India. It must be brought to India immediately. People, listen to this very, very carefully. This is super interesting. It should be credited to the borrower's rupee account with AD category 1 bank. AD category 1. The reason AD category 1 bank is because RBI clear, RBI regulates this bank. RBI regulates these bank very, very carefully. There's a lot of rules and regulations put on AD category bank. Hence, it's a trusted bank. Hence, it should be credited to a bank account under AD category 1 bank. Now comes the beautiful rule. Or it can be parked in a term deposit with that bank, but only up to 12 months. That means what? I have to deposit that amount into term deposits, but this is important. Maximum of 12 lakhs. Why maximum 12 months? Sorry. Tell me why this 12 months rule is put over here. It can be parked in a term deposit, fixed deposit with that bank, but only up to how many months? Maximum for 12 months I can park it. Can anyone tell me the logic behind why 12 months maximum rule is made? Can anyone tell me the logic behind why 12 months logic is made? Tejasvi Pawar, Atul PS, Ishwarya, Veni, Gauri, Vidhi Jain. Just think and tell me what could be the possible reasons. What could be the possible reasons why this 12 months rule is made? For bank, it is amazing, right? Bank is receiving money. Then why is the rule made that you cannot keep the money into a bank for more than 12 months? I will tell you the reason. The reason is, in a bank, if I start parking a lot of ECB proceeds, lot of ECB proceeds. If I start parking this and I do not use this ECB for any business purpose, that means what? I will start earning interest from the banks for the ECB. If not needed now, then why from foreign? Okay, I will tell you, Rahul Kanchan. Because the reason is, if these people, what they will do is, it will be a clever way of earning a lot of money. What I will do is, I will start taking a lot of ECB loans, I will park it in Indian bank and I will earn interest from that money. For that reason, bank will tell that you cannot use the money and keep it idle. You have to use that money. You have to put it into use. That is the logic behind why this 12 months rule is made. You have to use that money within 12 months. If not needed now, then why from foreign? Rahul, is this a question or is this your answer for my question? Why money should be kept? Why money should be used within 12 months? Why 80 category 1 banks? Because they are tightly monitored and ensure the money is used properly and legally. Abhinetra, liquidity is also a reason, but the main reason is this, Abhinetra. Money should not be kept idle. Yes, Rahul Kanchan. If not needed now, then why from foreign? Okay, Rahul, can you please rephrase the sentence properly? I think you are very, very close to the answer. Yeah, so Rahul Kanchan, I think you are saying that if you do not require the money, why are you raising the money? Is this your answer? Am I correct? Rahul, this can also be a reason where 12 months period I need some time where I can properly utilize that money immediately. As soon as I raise ECB, it is not an obligation for me to immediately spend it somewhere. It should not be immediately to spend somewhere, right? So I can take a lot of time, but not more than 12 months. Money should not be kept idle for a long period of time is the main logic behind this rule. Okay, people, did you understand the logic behind the rule that I am teaching you? Is this ECB chapter super interesting now? Now comes the next topic, that is refinancing of ECBs. Refinancing means taking a new ECB to pay off an old ECB, usually to get better terms like low interest or more time to pay. Okay, we know this. Now, what is the condition for refinancing? Let's understand. What are the conditions for refinancing? Maturity of new ECB must not be shorter. This is very, very important. Maturity of new ECB should not be shorter. Old ECB maturity is, let's say, 5 years. Now, new ECB maturity is, let's say, it is 3 years or 2 years. Not allowed. Why? Again, if I am raising ECB for 2 years, 3 years, short term period, that means I am taking a short term ECB. And if I raise short term ECB, any loan which I take, there is a possibility of doing a default in that. So short term ECB has the possibility of having a default more, because it's a short term. I have to repay it within a very, very short period of time. The reason why this is made is to eliminate the possibility of default. This is the reason why this rule is made. Maturity of new ECB should not be shorter than the old ECB. Vidhi Jain, totally you have said for in what context have you told you? In what context have you told totally, Vidhi Jain? Yes. You cannot take a new loan that demands faster repayment than your old loan. You can keep the same maturity or extend it. You can either keep 5 years or 6 years, but not less than the old ECB tenure. Next, ECB must have lower all-in cost. The total cost of new loan must be less than the old loan. Obviously, for that reason only, if you are raising ECB, you are raising ECB for what? To pay off the old loan in refinancing. Now, what is the logic if the overall cost of capital of new ECB is more than the old ECB? Correct? There is no logic in that. Hence, this rule, which is very, very obvious, is included. Next, Indian banks can help only for highly rated corporates and Maharatna, Navaratna PSUs. Can you tell me the meaning of Maharatna and Navaratna PSUs? I have raised ECB. Now can I take loan to pay off the old ECB is a question where this context come in. Indian banks can only help you in giving loans to pay off the old ECBs when if you are a top government PSUs. People, Maharatna means high performing government companies. Maharatna means high performing government companies. Navratna means what? They are comparatively smaller than Maharatna. Okay, like Indian Oil or ONGC. Indian Oil or ONGC. So Indian banks can help only for highly rated corporates and Maharatna. Ordinary companies, no help from Indian banks. If you're an ordinary company, you will not receive any help from Indian banks. Indian banks is only going to help you if you are a Maharatna company or a Navratna company. Is everybody with me, people? Is everybody with me, guys? Give me a quick thumbs up. Drop me a heart, send me a heart, give me a quick thumbs up. Amazing, Ishwarya. People, government companies, Maharatna, Navratna are safe companies, okay? The chances of doing a default is very less. That's the reason why Indian banks are only allowed to help Maharatna, Navratna company. For ordinary companies, you will not get any help from Indian banks. Perfect, Gauri. Perfect. Now comes conversion of ECB into equity. People, what we are doing is we are learning all the important topics that can be asked in the exam. These are all the important topics that we are studying. Okay, not a single topic is unimportant. Every single topic that we are studying right now is important because I have filtered a lot of topics from the chapter to save time. Okay, those are all the important topics that you cannot afford to skip it at all. That's why I'm teaching you the most important topics in the most beautiful way possible, along with the logic, so that you do not ever forget the answer in the exam. Yes. Next, what is meant by conversion of ECB into equity? Instead of repaying your foreign loan in cash, you give shares to the lender, which means what? Jeff Bezos has given me ECB loan for business purposes. Now, instead of repaying Jeff Bezos back, what I do is I give him shares of my company. In that case, am I allowed or am I not allowed? If I am allowed, what conditions I have to follow? If I am not allowed, why am I not allowed is the question. What are the rules that you must follow? Your company must be doing a business where FDI is allowed automatically. If FDI is not allowed automatically, government approval is required from the foreign investment. Government approval is required from foreign investment. With people, if this rule was not been in place, then what will happen is Jeff Bezos will what he will do is to enter into prohibited sectors. What he will do is he will invest, he will give me loans. Then what I will do is I will convert that loan into equity. I will give him shares. That means Jeff Bezos has literally invested in the company, which is completely prohibited. That's why this rule is made to stop Jeff Bezos from investing in companies in which sectors are prohibited for foreign investment. For that reason, this rule is made. If ever I want to convert the loan into equity shares, I want to give shares to Jeff Bezos, I should ensure that the business which my company does is into a business which is not prohibited by the government. If I am prohibited, I have to get a proper approval from the government saying that I'm going to convert loan into equity. Will you give me permission? If the government says yes, we can go ahead. The government says no, he cannot go ahead. If not, conversion is not allowed. You can't magically turn debt into equity ownership wherever you want. Next, lenders consent and no extra. How many rules we are going to study, people? We are going to study 7 rules. We are going to study, okay? 7 rules. First rule is very, very easy. Lender must say yes, no forcing them. I cannot force Jeff Bezos to convert the loan into equity. No extra fees on the borrower during conversion. Jeff Bezos says, okay, bro, give me the loan. Once again. Jeff Bezos tells me that, okay, bro, you can convert the loan into equity shares. Now, he cannot say now that, okay, you can convert your loan into equity shares, but provided you have to pay me XYZ exorbitant money you have to pay me for this, for me to accept your condition. He cannot say that. No extra fees on the borrower during conversion. Jeff Bezos cannot put extra fees on me to convert loan into equity shares. He must respect sectoral caps and conditions under FDI policy. Very easy. Next, pricing guidelines. Shares must be issued at a fair price as per FDI laws. That means what? Loans is converted into equity shares. The equity shares have to ensure that equity shares is fairly priced and not priced very, very low. Understood? No cheap shares or shady deals allowed. Next, reporting to RBI. If loan is partially converted, 1 lakh loan, only 75,000 rupees is converted. Then what? I have to file form FCGPR for FDI reporting and ECB2 with a note saying that it is partially converted. Full conversion, file FCGPR plus ECB2 mentioning fully converted. Guys, are you with me? Just give me a quick thumbs up. No more ECBs reporting after that. If there is full conversion, you don't have to report. Once I fully convert the loan into equity, I am not supposed to file ECB again. Next, phased conversion, report phase by phase using FCGPR and ECB board, which means what? 10,000, 10,000, 10,000, 10,000. Gradually, I am converting the loan into equity. In that case, I have to file FCGPR plus ECB, both every year. Perfect, guys. Yes. Next is you have to follow prudential guidelines. If you have loans from Indian banks too, you have to follow RBI's loan restructuring rules. You can't just manipulate balance sheet casually. This is the main purpose of this rule. Consent from other lenders. If other banks or lenders are involved, take their consent. Otherwise, you could be breaching loan covenants, which means what? Let's say Lenskart, HDFC Bank has already given 1,000 crores to Lenskart, saying that you are not, if you want to raise funds in the future, you have to take my permission. This rule is generally made because HDFC Bank may think that Lenskart is borrowing more than its capacity. Hence, for that purpose, HDFC Bank may give the loan under one condition, saying that Lenskart, you can raise money, but before that, you have to take my consent. I will review for what purpose are you raising the loan. I will review where will you use that loan. Do you have the capacity to raise additional funds? If he does not have the capacity, still he raises funds, that means Lenskart will end up doing a default. the company will close down, because of which HDFC Bank will suffer a loss. For that purpose, HDFC Bank will tell Lenskart that in future if you raise loan, you have to take my permission. So consent from lenders. Now tomorrow, Lenskart, after he takes a loan from HDFC Bank, Lenskart wants to raise ECBs from Jeff Bezos. He has to ensure that other banks or lenders are involved, take their consent. Otherwise, he could be breaching the loan covenants. What is meant by loan covenants? This is meant by loan covenants. People, are you finding it interesting now? Are you finding it interesting? Super interesting? We are studying along with logic. Yes. Give me a quick thumbs up, guys. Vidhi Jain, Ishwarya, Gauri, Tejasvi Pawar, Rahul Kanchan, Abhinetra, Atul PS, Veni. Gopal sir was also there. Where has he went? Yes. Quickly give me thumbs up, guys. Oh, Chandrasekharan Gopalan sir, you are there. Great, amazing, amazing, amazing. Chandrasekharan Gopalan sir, what do you do, sir? Rahul Kanchan also there. Okay. Perfect, perfect, perfect. Exchange rate for conversion. Exchange rate agreed at the time of deal or a lower rate if both sides agree. Now that 1 lakh dollar loan is going to be converted into equity shares of, let's say, 1000 rupees. Now what will be the conversion rate at which 1 lakh US dollars will be converted into equity shares of 1000 rupees each? Exchange rate should be agreed at the time of the deal or a lower rate if both sides agree. A fair value of shares will be as per the date of conversion and not earlier. Fair value of shares will be as per the date of conversion. When this loan will be converted into equity shares, on that date, whatever fair value we have arrived at, they have to follow that fair value only. Yes, perfect. Next, we're going to understand trade credits. Sir, in parking of ECB proceeds in domestically can hold only 12 months. The project requirement more than 12 months. The project payment required payment installment base. Then how will we hold the fund? So can you please, are you trying to ask me, sir, in parking of ECB proceeds in domestically can hold fund? The project requirement more than 12 months. The project payment required payment installment base. Then how will we hold the fund? Rahul, I will tell you one thing. You have to use the fund. You can invest in safe government securities. That is allowed. When we understood, when we raise ECB from foreign, when we want to utilize the ECB proceeds in foreign, we understood that it has to be kept in safe securities. Okay, it should not be for the purpose of earning interest from that ECB. Okay, so you have to put that ECB into use within 12 months. If not, you have to invest in government securities so that your investment remains completely safe. Understood? Yes, guys. Perfect, 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 Rav. Basically, the goal should not be to earn interest. The money should not be kept idle, is the main purpose why this rule is made. You can utilize that money into, say, financial assets like NBFCs. You can utilize that money into government securities. That is allowed. Okay. Perfect. Yes, yes, yes. Next. Yes. Okay, now we are going to talk about trade credits. Now we are going to talk about trade credits. What are trade credits, people? Basically, foreign suppliers, foreign banks or financial institutions can people, one second. Yes, yes, yes. What is meant by trade credits? Trade credits are loans or credit given by foreign suppliers, banks or financial institutions to Indian importers to help them buy goods from abroad. Which means what? Who gives the credit, people? Foreign suppliers give the credit, banks give the credit, or financial institutions give the credit. To whom? To Indian importers, so that Indian importers do not have to pay upfront money whenever they are importing goods from abroad. Understood? Now, trade credits can be utilized for two purposes: for capital goods, for machines or equipment used to make other products, or for non-capital goods, goods used directly by consumers like raw materials or daily use items. Perfect. So trade credits can be utilized for two purposes, either for capital goods or for non-capital goods. Now, what are types of trade credit? Suppliers credit and buyers credit. When the seller gives time to the buyer to pay later, it is called as suppliers credit. Buyer's credit means what, people? When the buyer borrows from a bank or lender to pay the overseas seller, is called as buyer's credit. When buyer borrows from a bank to pay to the overseas seller, is called as buyer's credit. Next, what is meant by maturity period? It can be short term or it can be medium term. For non-capital goods, repayment period is between 180 days to 1 year. For medium term, for capital goods, repayment is up to 5 years. Okay. For maturity period, for non-capital goods, repayment is between 180 days to 1 year. For medium term, for capital goods, repayment is up to 5 years. Now, recognized lenders. Only lenders approved by RBI can give trade credit under Indian rules. So, only, can anyone give trade credit? No. Who can give trade credit? Approved lenders by RBI or financial institution can only give trade credit. Is everybody with me, guys? Is everybody with me? Guys, give me a thumbs up for those who are actively watching, guys. You guys are really very patient, guys. Watching for 3 hours continuous is a very big thing. Atul PS, yes sir. Amazing, Atul, amazing. Now, why is trade credit important? It helps Indian business import goods easily without paying immediately, giving them more flexibility. trade credit, because of trade credit, importers do not have to pay upfront immediately. They can get they can get their own time to repay the money. Now, trade credit in SEZ, FTWZ, DTA. People expected question. This is an expected question in the exam. Please study this very carefully. Okay. What are SEZ, FTWZ and DTA? SEZ, area with special rules to encourage exports and foreign investment. Businesses here get tax benefit. Basically, SEZ is an area which is identified by the government, where whoever does business over there, they get tax benefits, is called as SEZ. What is meant by FTWZ? Free trade and warehousing zone. It is similar to SEZ, but it focuses on where? Warehousing and logistics, allowing duty-free re-export of goods. Tomorrow, if I set a warehouse in free trade and warehousing zone, I will receive a lot of benefits, subsidies in duty repayments. Understood? Next is DTA. The rest of the country where regular taxes are applicable is meant by DTA. So, SEZ is an area where businesses can get tax benefits. FTWZ, free trade and warehousing zone, is an area where whoever sets up warehousing over here, they will get duty free benefits just because they are setting the warehousing over here. Tomorrow, when these people will start re-exporting goods, duty will be either very less or zero duty they have to pay. Export duty. Export duty. Understood, guys? Now we'll understand trade credit in SEZ and FTWZ. Businesses or developers in SEZ and FTWZ can raise trade credit to buy both capital and non-capital goods from within or between SEZ or FTWZ. Which means what? Two SEZ are there. Two SEZ are there. Business. Now there is another area, DTA. So I know that if I do business with a person who is located in DTA, my cost will be huge. But if I do business with SEZ or FTWZ, my cost will be low. Why? Because in DTA there is no tax benefit. In FTWZ, we will receive all types of duty-free export benefits. Over here, tax benefits. Now, a company in one SEZ can borrow trade credit to buy equipment for another SEZ and pay later. Correct? Why would they do that? Because the cost of capital will become very less. Just because I'm enjoying tax benefits, just because I'm enjoying duty-free export benefits, my overall cost is very low. Next, trade credit for DTA purchase. The company in DTA can also use trade credit to buy capital or non-capital goods from an SEZ or FTWZ. Example, a DTA company can borrow credit to buy machinery from an SEZ business. A DTA company can borrow credit to buy machinery from SEZ business. This is the importance of people. Trade credit in SEZ and FTWZ, my overall cost of capital will be reduced to a very, very great extent. Is everybody with me, guys? Yes. Now let's talk about SEZ Act compliance. The trade credit transaction SEZ and FTWZ must follow the SEZ Act 2000, including tax, export, import rules. The act is updated period. What all compliance requirements they have to make as per the SEZ? They have to comply. Next, date of ownership transfer. The date of ownership transfer is the official date for the trade credit transaction. Example, when machinery's ownership changes in an SEZ, that's the trade credit date, even if it has not been physically delivered. Means what? The moment ownership changes in the SEZ, even though it was not physically delivered, that date will be called as trade credit date. No customs bill of entry is required for sales within SEZ. Instead, an inter-unit receipt via NSDL is used for transaction within. Okay, people, this is not at all important. Okay, all important topics we have understood till here. Till here, all the important topics we have studied. Now, people over here, I will tell you one thing. I've given you expected question can be asked in the exam for trade credit in SEZ, FTWZ, DTA, Trade Credits Framework, EQ. EQ means expected question. Okay. Now, are you guys ready to solve MCQ? Welcome, Rahu Jaju. Are you guys ready to solve MCQ questions? Yes, people. Yes. Give me a quick thumbs up if you guys are ready to solve MCQ questions. Yes, perfect, guys, perfect. The first question is, what does MAMP stand for in the ECB framework? What does MAMP stand for the ECB framework? Yes, people, give me the question number and along with that I need answer. 1C, maximum allowable maturity period. Okay, Gauri is saying 1B, minimum average maturity period. Rahul Kanchan, 1B. Yes, correct. Perfect. Which of the following is a non-permittable end use of ECB funds? Investment in stock markets, capital expenditure, refinancing of an existing ECB, import of machinery. What is the answer of second question? People, like this question, such questions are going to be asked in the exam, people. Such type of questions will be asked in the exam. Second B, second B, second B. Yes, perfect, perfect, perfect. Now, what is the meaning of overall cost ceiling for ECB? Perfect, Gopal sir, perfect. What is the overall cost ceiling for ECB? What is the meaning of this? Tejasvi Pawar, amazing. Your answer is absolutely right. What is the meaning of overall cost in ceiling for ECB? Third B, interest rate plus processing fees plus other charges. Yes, yes, yes. Amazing, Gauri. Correct. Correct, Rahul Jaju. Great, guys, great. Number 4. Conversion of ECB into equity shares requires approval from the borrower's board of directors, lenders' consent and compliance with FDI policy, permission from the Ministry of Finance, a minimum credit rating of AAA. Amazing, Rahul. Amazing. Perfect. Perfect. People, with this, let's stop FEMA rules because we are done with salient features of FEMA. We are done with FDI. We are done with liberalized remittance scheme. We are done with external commercial borrowing. Along with that, I also told you what all expected questions will be coming into the exam. Answers are also there in this notes. Apart from the notes, MCQ questions are also there in these notes. For every chapter, 50 MCQ questions are there. You have to download the notes from the link below. You have to start solving the MCQs also, people. Okay, it is very going to be useful for your exams. I can 100% I will tell you that 70 to 80% of the questions that will be asked in the exam will be from my marathon notes. This is my promise, people. Because very carefully topics have been chosen by analyzing lot of past years question papers, what all questions are repeated, what all questions are not repeated. After analyzing everything, these marathon notes have been prepared. Let's take a break of 5 minutes and then we'll start with Competition Act. Are you guys with me? Just give me a quick thumbs up. Atul PS, Gauri, amazing. Your answers are absolutely correct. Well done. Perfect. Let's take a break of 5 minutes, guys, and then we'll resume, okay? 5 minutes. Break. 8:45. Yes. Guys, have you done your dinner? Have you done your dinner, guys? Gauri, when are you going to do your dinner, guys? Okay, let's meet at 8:45 people. Okay, and then we'll have that small talk about dinner. Okay, I will see you. Yes, people. Yes, yes, yes. Welcome back, people. In half an hour, we are going to complete the Competition Act 2002 and Competition Commission of India. Rahul says 9:30 is going to have dinner. By 9:30, we will ensure that the 2 chapters are completed. Okay. Quickly, we will speed it up. All right, all right. Is everybody with me? Just give me a quick, sweet thumbs up. Yes. Yes, people. Yes. People, this chapter is super interesting. This is my promise. Okay. Is everybody with me? Yes, people. Yes. Thank you, sir. We are with you. Rahul Gaju, love you, bro. Love you so much. You can have a dinner, Rahul. No problem. You can come after having a dinner. I'm going to wait. Okay. Don't worry. Chill. Just have your dinner. Just watch this video while having a dinner. Just enjoy the class. Okay. Now this Competition Act and Competition Commission of India, which you guys might find it boring. Now, trust me, people, this lecture is going to change everything. I'm going to give you so many amazing examples that you have never even thought of. Hi, Gauri, how are you? Where are you from, Gauri? Yes, let's charge it up. Perfect. Let's get started. Competition Act. First is, let's understand the meaning of agreement. What is the meaning of agreement? Agreement includes any arrangement, understanding, action in concert, whether formal, informal. Agreement means any arrangement, whether formal, informal, oral, written, implied or express, that is related to production, supply, distribution, storage, acquisition or control of goods or services is called as agreement. Now, if this agreement causes appreciable adverse effect on the competition, this agreement is called as anti-competitive agreement, plus it is void. So any agreement means agreement includes agreement is express, implied, oral, written, formal, informal, that is related to production, supply, distribution, storage, acquisition or control of goods. Now, if this agreement causes a very bad impact in the competition, this agreement is completely void, invalid. Okay. All right. Now, what are the types of anti-competitive agreement? If an anti-competitive agreement is likely to cause appreciable adverse effect on the competition, it is void. If an anti-competitive agreement is likely to cause appreciable adverse effect means bad effect on the competition, it is void, invalid. Now, what are the types of anti-competitive agreements? Horizontal agreements and vertical agreements. What is meant by horizontal agreements? Between the enterprises that operate at the same level of production or distribution chain is meant by horizontal agreement. Competitors are called as horizontal agreement. Now, these typically involve competitors and are presumed to cause appreciable adverse effect on the competition unless proven otherwise. Which means what? Any agreement, any horizontal agreement, we are going to understand the types of horizontal agreements. Any agreement that is made horizontal agreement is presumed means what? Deemed to cause appreciable adverse effect on the competition unless it has been proven otherwise. Same stage of production chain. Perfect, Gauri, perfect. Yes. Now, what are the forms of horizontal agreement? Number one is price fixing. Number two is limiting production or supply. Number three, market allocation. Number four is bid rigging. What is meant by price fixing, people? Let's take an example of cement manufacturing industry. If you have not seen my video where I explained how the cement manufacturing industries, how cement manufacturing companies colluded together to fix prices of cement. What is meant by price fixing means these people, when the demand of the cement was high, instead of increasing the production of cement, what they did was they decreased supply of cement purposefully so that it will create an artificial demand in the market, because of which price will increase rapidly, and these people, instead of selling cement at this price, they will sell at this price, minting huge amount of money. That action is called as price fixing. Competitors agree that cement should not be sold less than 800 rupees per kg when the rate was actually 200 rupees per kg. When all the competitors decide among themselves that cement price should not be sold below amount, is called as price fixing. Number 2, limiting production or supply. Same thing we understood. Competitors collectively restrict quantity or goods or services available. Number 3, market allocation means what? In Maharashtra, Jio, Airtel, Vodafone Idea, everybody are operating. Now, what will happen is in market allocation, Vodafone Idea will say that I will operate in South, Jio will operate in North, and Airtel will operate in South. So people have allocated the market so that customers in that area will not have any other choice but to go to Jio in South, Airtel in North, and Vodafone Idea in East. Okay. So now whatever prices will be charged by these three companies will have to be paid by the customers, because customers do not have any other option. Next is bid rigging. What is meant by bid rigging? 4 bidders agree among themselves that who is going to win the bid this time. Let's say government wants to build roads. Government is inviting tenders. These people agree among themselves that only this person will win. That means if he quotes 100 crores for a project whose actual cost should be 80 crores, this guy will quote 100 crores. Now these all people will purposefully quote higher prices than 100 crores so that the one who submits the lowest tender will win more than 100 crores. He will give 150 crores, 200 crores, 160 crores. Hence, A will win. This is called as bid rigging. So there are 4 types of horizontal agreements: price fixing, limiting production or supply, market allocation, bid rigging. Next, in cases involving cartels, the burden of proof shifts to the parties to show that these agreements do not have appreciable adverse effect on competition. Perfect, Rahul Jojo. Perfect. When bidders collude, an amount should be predetermined. Perfect. Now, these agreements are presumed to cause appreciable adverse effect on the competition. Now, who will prove that this is not causing appreciable adverse effect on the competition? The people involved in the horizontal agreements will have to prove, and not the government. Understood? Because these people are presumed to cause appreciable adverse effect on the competition. Yes. Next, vertical agreements. Vertical agreements means what, people? Agreements between enterprises operating at different stages of production or distribution chain. Example, manufacturer to distributor to retailer. Now, what are types of vertical agreements? Vertical agreements, first of all, we need to understand that they are not presumed to cause appreciable adverse effect on the competition, because not all vertical agreements are anti-competitive or likely to cause adverse effect on the competition. So, not all vertical agreements are going to cause AAEC, means appreciable adverse effect on the competition. Yesterday, I have not received the notes that you have written in your handwriting, like the eligibility of issues, conditions of IPO. Nana Whale A. Just fill the Google form over there. You will receive your notes, buddy. Okay? Don't worry about the notes. Every single note will be given to you. Perfect. Now, next. So people, basically, horizontal agreements are not allowed. If they are causing appreciable adverse effect on the competition, the burden of proof lies on the people who are involved in the horizontal agreements. But vertical agreements are allowed. Now, what are types of vertical agreements? Let's understand. Tie-in arrangement, selling iPhone with the condition that you have to purchase the charger also compulsorily is called as tie-in arrangement. Exclusive supply agreement means what? McDonald's enters into a contract with a bakery shop saying that only you can sell me, okay, I will rephrase it. Only you can sell me buns. You cannot sell this bun to, KFC. or KFC or Burger King. Restricting a supplier from selling goods to anyone else. McDonald's enters into an agreement with a bakery shop saying that she should not sell the buns to any other person except McDonald's. Refusal to deal resale price maintenance. I have filled but received only the PDF. Then I will just talk to the team, okay? Don't worry. Today I will talk to the team and you will receive the notes. Next, what is meant by exclusive distribution agreement? Let's say in IPL, Coke enters into an agreement with the stadium saying that in your stadium, you should only sell Cokes and not any other Pepsi brand like Pepsi. Exclusive distribution agreement. Yes. Next is refusal to deal, which means what? Let's assume that the stadium has already made a contract with the Pepsi company saying that they're going to sell Pepsi in the stadium. Now when the stadium owner approaches Coke company saying that please sell Coke bottles in the stadium, Coke can tell them that we do not want to deal with you because you're already selling Pepsi bottles in the stadium, hence we refuse to deal with you. Next is resale price maintenance, imposing a fixed or minimum resale price on the buyer. Let's take an example of Apple. Apple may put a condition on all the iStores saying that the iPhone, which is costing 1 lakh rupees, should not be sold below 80,000 rupees. Otherwise, the image of the brand will deteriorate. That's called as resale price maintenance. Sure, sir. Thank you so much. Welcome, Nanavel. Welcome. Where are you from, Nanavel? Jnanavel. Sorry. Jnanavel. I got it. Are you Tamilian? Jnanavel, Tamil pesula ninga? Yes. Each of these vertical practices is evaluated to determine whether they are going to cause appreciable adverse effect in the competition or not. Okay. Next is dominant position. People just wait for the time. You're going to hear some of the amazing case studies, examples in this chapter. Meaning of dominant position. Dominant position means what, people? If an enterprise has the ability to do two things. Number one, operate independently of competitive forces in the relevant market. Let's take an example of Google. Google is the dominant player in the online search engine market. So Google is not worried about whether to charge prices lower for the ads that I am running on. No, Google can charge whatever price it wants on the ads that businesses want to advertise themselves. If businesses want to advertise themselves, they have to approach Google so that Google will show their ads on YouTube and in website. So Google can charge whatever price they want. They are operating independently. That is meant by operating independently. Number two, affecting competitors, consumers or market in the favor. People, you tell me, do you use any other search engine except for Google? Do you use any other search engine except for Google? There was a time when we used DuckDuckGo, Yahoo and Bing. Today, these people market share is so less that Google is imbibed in our habits. With the first thing we go on internet to find any information is on Google. So Google is imbibed in our habits. So Google affects the competitors like Bing, Yahoo, consumers like us or the market in its favor. Google can charge whatever price it wants. Now, this is meant by dominant position, means ability to do two things. Number one, operate independently so that to affect the market. Number two, affecting competitors, consumers or market in its favors. Operating independently of the competitor markets. Google is not at all bothered who are its competitors because Google owns how much percent of shares? 90% of shares. Rahul Jaju, amazing. That's unusual. Rahul Jaju, you are using Google. Rahul Jaju, what I am trying to say is, are you using Yahoo or did you use Yahoo? Yes. Now, Dominant position means a strength enjoyed by an enterprise in the relevant market in India, which enables to act independently of the competitive forces. Google does not care who are its competitors because it is huge, or influence the market outcomes. Google can charge whatever price it wants on ad revenues. Understood? Now let's talk about, now that we have understood the meaning of dominant position, let's understand the meaning of abuse of dominant position. When a person who is enjoying the dominant position is using that power for what? To harm competition or consumers, it is termed as abuse of dominant position. Now that we are going to understand what are the key aspects of abuse of dominant position. Number one is unfair or discriminatory practice in sale or purchase of goods or services. Number one is imposing unfair conditions in the sale or purchase of goods or services. I go to iStore, he's saying that if you want to buy an iPhone, you also have to buy you also have to buy AirDrops, you also have to buy the charger, which already I have. So I only want iPhone, but that shopkeeper, that store manager is asking me to also buy charger and AirDrops. That is not allowed. That is, I won't say that is allowed or not, but basically it is imposing unfair conditions in the sale or purchase of goods or services. Understood? Number two, engaging in predatory pricing or other unfair pricing methods to harm competition. In 2017-18, Jio launched free 4G services to all its consumers. So what happened is all the customers came into the loop, came into the funnel of Reliance Jio, because of which competitors like Airtel, Vodafone Idea faced tremendous amount of losses. The reason is Google gave 4G services free of cost. That is called as predatory pricing. We're going to understand the meaning of predatory pricing in detail. Basically, it's an unfair pricing method. So, unfair or discriminatory practices in sale or purchase of goods or services is done. Number two, limiting or restricting production in or market access. Restricting production, supply, availability of goods or services to manipulate market conditions. This is cement cartel that we understood. Cement cartel, which means what? They are purposefully, instead of increasing the production, what they did was they decreased the supply on purpose, so that they want the price to increase artificially, so that the price, when it reaches the peak, they will start minting super huge amount of money. Number two, hindering technical or scientific development to the prejudice of customers. People, you read this point also and read this point also. Refusing to deal or denying access to the market or essential facilities to competitors or potential entrants. People, we all know that Taiwan country is the dominant player in manufacturing semiconductors, right? Taiwan is the dominant player. Taiwan is one of the few countries that manufactures semiconductors to the overall world. Semiconductors is a very, very important chip component which is used for tablet, which is used in mobile, which is used everywhere. Without semiconductors, any company or any country cannot progress technologically, right? Now the problem is Taiwan is refusing to deliver semiconductors to whom? China, which China also wants to become a superpower, right? So semiconductors is a very, very important resource in today's world, based on which all the countries are dependent for technology, and without technology, country cannot perform well. So China wants to become a superpower country, but it can only become a superpower country when they have got technology. Now Taiwan is refusing to sell a very, very important resource, that is technology of semiconductors to China, because of which China's technological progress is getting disturbed. That is meant by refusing, hindering technical or scientific development to the prejudice of consumers. I've given you a crazy example, people. Next is refusing to deal or denying access to market. So Taiwan is basically stopping China from accessing a very important component in today's world, that is semiconductors, because of which now in today's world China and Taiwan are in a semiconductor war. Next, making contracts with extra unnecessary obligation. People, let's take an example of Apple. Apple has put a very bad condition on its app developers, saying that if app developers have developed an app and if a consumer like you and me wants to purchase that app, they will purchase the app, but payment should be made through Apple gateway only, not any other payment gateway. So if you are a customer, I am the app developer, and you want to purchase my app on the App Store has put a condition that you can only use one payment gateway, that is Apple's payment gateway. Now comes a very important part. Apple, whenever you make a payment of 100 rupees, 30 rupees will go to Apple. So Apple takes away 30% of commission for whatever consumers pay to the app developers, which means Apple is making the contracts. Apple is making the contracts with extra unnecessary obligations. What is the need to charge 30% commission when other payment gateways are charging only 2 to 3% commission? Apple is charging 30% commission, which is very unnecessary. This is called as, again, abusing of dominant position. People, are you with me, guys? Are you with me? Now are you finding it super interesting? We are understanding these with real life case examples. Shant KG. Hi sir. Hi Shant, how are you? Where are you from? Yes. Is everybody with me? Just give me a quick thumbs up and drop a heart. Okay, so key aspects of abuse of dominant position is: number one, unfair or discriminatory practices in sale or purchase of goods and services. The recent issue of lawsuit against the Meta related to buy WhatsApp and Instagram. Yes, that can be the reason. That can also be another aspect of abusing of dominant position. Yes, amazing guys, amazing. Now I am feeling super excited now. Okay, perfect. Next, using dominant position in one market to enter into another market. People, we all have heard about Amazon into the business of retail business, right? So Amazon has earned so much amount of money from the retail business. Now what it is doing is, with all that money it has got, it is now entering into a cloud computing service. What is meant by cloud computing service? Can anyone tell me what is meant by cloud computing service? Basically, cloud computing service is a platform that provides cloud storage for website designing to store important data of the users. Is called as cloud computing services. Now after this video uploads on YouTube, this is stored in a cloud computing service. Correct? So Amazon, with all that money, it is entering into cloud computing service, which is not a problem. The problem is Amazon, what it is doing is, while other platforms are charging normal fee for providing cloud computing service, Amazon is charging fee far less than all the people in the cloud computing services, because of which the same like Reliance Jio did with Airtel Vodafone Idea, the same thing Amazon is doing with cloud computing services, so that these people will eliminate from the market, and once these people are eliminated from the market, Amazon will gradually start to increase the price of cloud computing cost. So Amazon, what it is doing is using dominant position in the retail market. From that position, it is using enter into another market. What is that another market? Cloud computing service is the another market. Cloud computing industry is another market. Understood? You are a dominant position in one market. You have got lots of money. You have earned lots of money. Now you are using that money to enter into another market. Okay, this is called another aspect of dominant position. Is everybody with me? Just give me a quick thumbs up if you are finding the examples super interesting. I'm giving you all real life examples, people. Next, Predatory pricing. What is meant by predatory pricing? When a company sets a price lower than its production cost to put competitors out of the market, intending to raise prices once competitors are eliminated. Same like Reliance Jio did. Reliance Jio provided 4G services free of cost, that is below the cost of production. Why? So that to eliminate competitors from the market. Once the competitors are eliminated from the market, Reliance will gradually raise the price. This is called as predatory pricing. Next is combination and its regulations. A combination refers to acquisition, merger or amalgamation of enterprises where there is a significant change in ownership, control or assets. Let's understand this using a mind map. Yes, combination refers to sale of goods at a price which is perfect, Gauri, perfect. So what is meant by combination? Refers to acquisition, merger, amalgamation of enterprises where the nature of control or the ownership of assets changes significantly is called as combination. Now combination can be through acquisition of enterprise, merger or amalgamation or acquisition of control. Let's understand the basic difference between all these things. Yes. Merger means when two companies join together and form one entity like Vodafone Idea is called as merger. Amalgamation means what? Two or more companies combine to form a separate new entity where old companies cease to exist is called as amalgamation. Let's say Dena Bank and Bank of Maharashtra combine. Next, acquisition means what? When one company takes control over another company. Facebook acquired control over WhatsApp is called as acquisition of control. What are the key types of acquisitions? Acquisition of enterprises, Facebook, WhatsApp, acquisition of enterprises. Number 2, merger and amalgamation, which means what? Vodafone Idea merged. Number 3, acquisition of control. Reliance Industries has acquired control. Reliance Industries has not acquired the enterprise of which? One second, people. Reliance has acquired control over Future Group. Only controlling stake Reliance purchased from Future Group, but Future Group also owns Big Bazaar and Fashion at Big Bazaar. Now if we say that Reliance has acquired controlling stake, not completely, only controlling stake Reliance has acquired over Future Group. Now Reliance, without acquiring Big Bazaar, without acquiring Fashion at Big Bazaar, it has gained control over Big Bazaar. Yes or no? Gaining control of an enterprise that itself controls another enterprise operating in a similar competing business. Easy or not, people? Now tell me, are you finding this definition easy or not? Yes. Next is regulation of combination. People, not all combination will be subject to becoming under. Okay, not all combination will come under the purview of Competition Commission of India for inquiry or investigation. No, only those combination which will likely to cause appreciable adverse effect on the competition, it will be come under the purview of Competition Commission of India. Now, how will the threshold be determined? Let's understand. People, in India, combined, this is the new threshold as per March 2024. This is the new threshold. Is everybody with me? Just give me a quick thumbs up. Just give me a quick thumbs up. In India, combined assets exceeding should not be more than 2,500 crores. If two companies are in India, one company has acquired control of another company, the combined enterprise, the combined assets of the enterprise should not be, if it is more than 2,500 crores, it will come under the purview of Competition Commission of India. Combined turnover exceeding 7,500 crores, which means what? One company's turnover, another company's turnover, both combined is more than 7,500 crores, will come under the purview of Competition Commission of India. Next, in India or outside India, which means what? Two companies are, one company is in India, other company is outside India. Then what? Combined assets is exceeding 1.25 billion US dollars, including at least 1,250 crores in India. Next, combined turnover exceeding 3.75 billion dollars, including at least 3,750 is in India. Group level threshold, Reliance Industries and Adani Industries, Reliance Group and Adani Group. Over there, combined asset is exceeding 10,000 crores, combined turnover exceeding 30,000 crores, it will come under group threshold, group level threshold. Both are Adani and Ambani are in India. Now in India and outside India, let's say Tesla Group and Reliance Group are combining, exceeding is US dollars $5 billion, including at least 1,250 crores in India. Combined turnover exceeding $15 billion, including at least 3,750 in India. Yes. What is meant by de minimis exemption? Combination with the target enterprise has assets not more than 450 crores in India, turnover not more than 1,250 crores in India, will not come under the purview of Competition Commission of India for a period of how many years? For a period of 2 years. De minimis exemption means what? Assets should not be more than 450 crores or turnover should not be more than 1,250 crores. Then it will not come under the purview of Competition Commission of India. For how long? For 2 years. Next, people, you also have to learn the old thresholds, okay? Whenever a question is asked in the exam, always answer based on the old threshold also based on the new threshold also. Why? Because in suggested answer, if new threshold is given and you have written old threshold, you will lose marks. If in suggested answer, old threshold is given but you have written new thresholds, again you will lose marks. So it is better to answer based on both the thresholds. What is the harm? You will only end up impressing the examiner when you write answers from both the thresholds. Understood? Is everybody with me? Just give me a quick thumbs up. Now, what is the old thresholds? Individual company, two companies in India, 2 companies is in India. Individual threshold is what? More than 2,000 crores for asset and turnover is for more than 6,000 crores. Next, for a group, yes, welcome Vinny, welcome. For group India, assets should if asset crosses 8,000 crores, it will come under purview of Competition Commission of India. And for foreign and turnover is more than 24,000 crores. But if group are in foreign countries, one Tesla and Reliance, assets should be more than $4 billion, turnover should be more than $12 billion. At least 1,000 crores should be in India, and over here at least 3,000 crores should be in India. Over here, one company is in India, one company is in foreign. If asset crosses $1 billion, where at least 1,000 crores is in India, or if turnover crosses more than $3 billion and at least 3,000 crores is in India, it will come under the purview of Competition Commission of India. Perfect? Yes. Now, what is the meaning of group that we understood in these thresholds? What is the meaning of group? Group means includes entities that are under common control, whether directly or indirectly. It includes companies, firms, individuals, which collectively influence management, policies, decisions of whom? Of involved entities. Reliance Industries controlling Reliance Retail, Reliance Fashion, Reliance Trends is called as, that means they are a part of a group. Next, when will a company not be considered as a part of a group? If the group exercises less than 50% control over that enterprise, that enterprise will not be a part of a group. Which means if Reliance Industries controls only 30% in Reliance Jio, that means Jio is not a part of Reliance Group. Easy. Just give me a quick thumbs up, guys, if you are loving this session. Now, valuation of assets. Asset value is determined based on book value from audited accounts of the previous financial year. Obviously, now depreciation must be accounted for. It includes brand value, goodwill, intellectual property, other commercial rights. Next, regulation of combination. Once threshold is crossed, now what? Let's understand. Yes. If combination has crossed threshold, then what? Prohibition of combination is harmful for the competition. If the combination is likely to reduce competition or harms consumers, it is prohibited, hence it is void. That means it's going to cause appreciable adverse effect on the competition. If the combination is going to cause appreciable adverse effect on competition, that combination will be prohibited. Next, notice to the commission. If the combination exceeds financial thresholds, company must notify the commission about the proposal that we are going to combine with this company. They also have to provide details about the combination. Also, they have to give agreement and board approval process along with the fees. Notice should be filed within 30 days from the date of board approval or the signing of agreement, whichever is earlier. Number 3, what is the timeline of approval? Combination cannot be finalized until 210 days have passed, until we have given notice to Competition Commission of India, or if the Competition Commission of India has given a response to us that you can proceed forward or you cannot proceed forward, whichever is earlier is the timeline for approval. Next, exemption in certain acquisitions. Investment and acquisitions made by investment and acquisition between public financial institutions, banks and venture capital funds, such as buying shares under loan agreement, they are exempted from coming under purview of Competition Commission of India, but they have to file the details about the acquisition within 7 days of completing the transaction. They will not come under purview. Competition Commission of India will not investigate them, but they will have to report the Competition Commission of India that we have entered into XYZ agreement. Understood, people? Very easy. People, you can take a quick screenshot. 5, 4, 3, 2, 1. Perfect. Next. Procedure for investigation, people, is not important. It will never be asked in the exam. This can be asked in the exam. Order of the competition or commission, or order of the commission on certain combination. What all? Now that Competition Commission of India has investigated the combination, now what? What all orders can Competition Commission of India can give? People, just give me a quick thumbs up if you are listening to me. A lot of viewers have joined the session. Just give me a quick thumbs up. Yes. What are the possible orders Competition Commission of India can pass? Number 1, they can either approve the combination. Number 2, they can either block the combination if they found that if they have found that it is going to cause appreciable adverse effect on the competition. Number 3, they can modify the agreement between the competition. Number 3, they will have to ensure that whatever modification Competition Commission of India has suggested, the people are following it. Next, amendments to proposed modification, which means what? Competition Commission of India has suggested some modification. Now, the companies Reliance and Adani Group, let's take an example of Reliance and Adani are getting into merger. Okay, so now Reliance and Adani are telling to Competition Commission of India that sir, let's change the modification. Okay. First of all, Competition Commission of India will give any modification. They may choose to accept or not. If they choose not to accept, they may suggest some amendments to the Competition Commission of India. Now, the Competition Commission of India, if they accept, that means they have to implement. If they do not still accept, that means the combination is going to cause appreciable adverse effect on the competition. Now, still they did not, if blocked combination must not proceed. If at all Competition Commission of India have told that you cannot proceed with the combination, still if they proceed, that means they are going to cause appreciable adverse effect on the competition. If a combination is declared void, it is treated as if it was never occurred under applicable laws. We are done with the Competition Act 2002. People expected questions are: explain the concept of dominant position and abuse of dominant position under Competition Act 2002. You have to give the answer. Answers everything I have mentioned in the notes. Simply you have to learn it. Just follow the rules that I have taught you about how to write answers in the introductory part of the first day marathon video, people. Number 2, explain horizontal and vertical anti-competitive agreements along with examples. Explain the thresholds for combination under the Competition Act 2002. Okay, people. Now, people, without wasting any time, let's start solving the MCQ questions. Number 1. Before the Competition Act 2002, which legislation regulated unfair market practices in India? Give me the answer. Abhinitra, Rahul Jaju, Gauri, Veni, Tejasvi Pawar, Atul PS, Shant KG, Jnanavel. What is the answer of this? I will give you the option. Whether Consumer Protection Act, whether Monopolies and Restrictive Trade Practices Act, Foreign Exchange Management Act, or Companies Act 1956. What is the answer of this? One B, Monopolies and Restrictive Trade Practices Act 1969. Amazing, amazing. Veni, Gauri. Superb, guys, superb. People, I have observed one thing. Till now, nobody have answered wrong MCQ question. That's super amazing, guys. Really. Next, when were the provisions regarding anti-competitive agreements and abuse of dominance officially enforced in India? Okay, I'm not expecting you to remember this, people. Let's forget it. People, I will just tell you how many MCQs I have given. See, so many MCQs I have given to you. Let's take a random MCQ. This MCQ, let's take it. Which of the following is an example of abuse of dominant position? Tell me the answer of this, people. 14 answer. 2A, Gauri. Seriously? Are you able to remember the date? That's amazing, Gauri. Oh my God. Crazy. What is the answer of 14th question? Which of the following is an example of abuse of dominant position? A company offering discounts to increase sales, a dominant. 14 answer A. 14 answer A. 14 answer A. Answer A. Answer is B, guys. A dominant company refusing to sell essential raw materials to competitors. People, just now I told you the example of which example? China and Taiwan. Ravi Kashiani. Hi Ravi Kashiani, from where are you? People have told you, this is the reason why I'm giving you some extraordinary crazy examples. China, Taiwan. Taiwan is trying to control the supply of a very essential element. What is that? Semiconductors. To whom? China. So that China does not progresses technologically. Correct? Yes. Perfect, guys. No problem. People, I want you guys to make as many mistakes as possible. I want you guys to make as many mistakes as possible. Half an hour. So people, I would want you to make as many mistakes as possible. That is the reason why I have given you 50 MCQ questions. Make as many mistakes as possible, but also understand where you went wrong and try to correct it. Okay? You should be very thankful that you are making mistakes right now. If it will be in the exam, you will lose marks. Correct, people? 15th answer, what is? Yes. Yes, this is important, people. 19th question. Gopika Prakash. Sir, will you upload this marathon? Yes, Gopika, this video will be uploaded on YouTube. Don't worry. Ravi Kashian, you did not tell me from where are you? Mohan Reddy. Hi, Mohan Reddy. Where are you from? Yes, people, tell me the answer of 19th question. Which of the following is exempt from normal combination regulation under certain conditions? Acquisition by public financial institution under loan agreements. Perfect. Great going, guys. Great. Now, last MCQ, then we'll come to the Competition Commission of India because my battery is running super low. Okay. Without wasting any time, let's move on to the last. Okay. Once again, people, I do not expect you to learn the dates, but still. Yes. If CCI believes a combination may harm competition, what is the first step in investigating? 20 answer D. Oh my God, Tejasvi Pawar. This girl is Tejasvi and Gauri. Brilliant girls. Amazing, guys. Amazing. Guys, tell me 21 question answer. If the CCI believes a combination may harm competition, what is the first step in the investigation procedure? 21C, Tejasvi Pawar. Okay. Perfect. Amazing, guys. Amazing. Okay. With this, let's start the next chapter, that is Competition Commission of India. Yes. Ravi Kashiani, please tell me where are you from? Mohan Reddy, also tell me where are you from, guys? Yes. Competition Commission of India. Quickly we'll understand this, people. What are the duties and powers of Competition Commission of India? Number 1, power to inquire into anti-competitive practices either on its own or on receiving information from 3 people: consumer or trade association, government authority or state authority. What is meant by state authority? Means SEBI or RBI. Government means central government or state government. Number 2, what all factors Competition Commission of India will take into consideration to determine whether an agreement is anti-competitive in nature or not. It will take negative effects on the competition, positive effect on the competition. Negative effect means barriers. Is this agreement anti-competitive? Is this agreement is trying to stop new people to enter into market? Number 1. Number 2, is this agreement trying to block market entry? Means what, people? I will tell you. Negative effects: barriers for new business, driving out competitors, blocking market entry. Blocking market entry, we understood. Okay. Barriers for new businesses, which means what? Is it difficult for new company to enter into market? Number 1. Number 2, is it trying to stop other people to do the business? Number 2. Number 3, is it trying to drive out existing competitors out of the market or not? All these factors will be taken into consideration when finding out negative barriers for competition, negative effect on competition. Number 2, positive effects. Is this agreement benefiting the consumers? Is this agreement leading to improvement in production or distribution of the goods and services? Number 3, is it encouraging innovation or not? So negative barriers, positive barriers. Next, what are the factors to determine to find out whether what are the factors that will be taken into consideration to determine whether a company is abusing its dominant position or not? Market share. Now let's take an example of Google. Google owns how many? People tell me Google owns how much percent market share? I've told you 90%. Financial resources, Google has got a lot of money. Number 3, competitor strength. What is the strength of DuckDuckGo, Bing, Yahoo? Close to nothing. Consumer dependence. Consumer are completely dependent on Google. That means Google is in a dominant position. Understood, people? Google is in a dominant position. Now, after that, determine the relevant market. Before taking action, CCI defines a market where competition is affected. Is it product market or is it geographical market? In product market, physical characteristics and end use, price range, consumer preferences taken into consideration. Physical characteristics and end use. Let's take an example of cement. Cement is the same product, but there is a type of cement, white cement and grey cement. White cement is used for different purpose, grey cement is used for different purpose. Hence, their market is different. Price range. Let's take an example of luxury perfume and a normal perfume. Even though both are perfume, the market is totally different. Next is consumer preference. Consumer, for example, phones. Everybody uses phones, but there are types of phones. One person uses iPhone, one person uses Android, which means iPhone market is completely different from Android market. Yes. Next is geographical market, regional and national demand. Mangoes in Maharashtra, demand for mangoes in Maharashtra will have a different market compared to mangoes in Chennai. Transportation cost. Just because cement is produced in city, but cement which is transported to village. Okay, people, one thing. If assuming cement is manufactured in a city, okay, now the same cement will cost more in villages. Why? Because transportation cost is involved. Because the cement is manufactured in a city, the cement price in village will be more. Why? Because of transportation cost. Okay, so this is how Competition Commission of India will determine the relevant market. Next, what are the orders of Competition Commission of India after inquiry? They will ask to stop anti-competitive practices immediately. Number 2, they will impose a monetary penalty. What will the monetary penalty? 3 times the profit earned. Let's take an example of cement cartel we spoke about. The profit earned by cement cartel, 3 times profit will be the penalty. Or 10% of turnover. Let's say cement cartel existed for 3 years. So every year turnover will be calculated, turnover will be totaled, and then 10% of the total turnover will be the penalty, whichever is higher. Is everybody with me, guys? Is everybody with me? Just give me a quick thumbs up. Gopika Prakash, where are you from? Number 3rd order is Competition Commission of India will try to modify the agreement. Modify the agreement. Let's take an example of what example can we take? Let's take an example of Instagram. Okay. How will Competition Commission of India will modify the agreement of Instagram? If people think that small businesses are not getting advertised on Instagram. Why? Because Instagram is only giving preference to big businessmen. the only businessmen who are paying them a lot of money, then Competition Commission of India will tell Instagram that you have to change, you have to modify the agreement, you have to change your algorithm. This is how CCI will try to modify the agreement so that small businessmen should also be benefited. Next, directing companies to follow other orders. CCI will ask the company to pay investigation cost or take corrective measures. Whatever investigation proceedings have been involved, whatever cost have been incurred, CCI will ask them to pay the investigation cost. Next, issuing other required directions. CCI can pass any other order trying to restore fair competition. Instagram algorithm is this example. Modifying agreement. So CCI can give 5 orders. Stop anti-counterfeit practices immediately. Number 2, impose a monetary penalty. Number 3, modify the agreement. Number 4, directing companies to follow other orders. And number 5, issuing other required directions. Okay. Next, actions against entire business group. CCI can take, for example, let's say Reliance Jio is abusing its dominant power. Inbuilt apps in phone is also example. Yes, Atul, perfect. Inbuilt apps in phone is also an example. Google can enter into a agreement with the phone manufacturers saying that when you manufacture the phone, before you sell the phone to customers, you have to install Google app on your phone. This is again abusing of dominant position. So Competition Commission of India will tell Google that you have to stop this type of agreements immediately. Thank you, Atul PS. Thank you so much for helping me out. I was actually running out of example. Perfect. Action against entire business group. Yes. So CCI can extend the penalties to the entire business group if the parent or related companies are involved in the violation. Division of enterprises. Yes. If CCI finds an enterprise is abusing the dominant position, CCI can. How does CCI divide the enterprise? CCI will ask people, is it visible? Display is visible? Is my display visible, guys? I have just reduced the brightness so that I can speak for more another 15-20 minutes. Is my display visible? Just give me a thumbs up, okay? How does CCI divide an enterprise? Transfer of property. The CCI may force a company to sell or transfer assets like factories, stores or offices, which means what? Let's take an example of Jio. Jio owns a majority of tower in Pune. So Jio is not allowing Airtel, Vodafone Idea to operate in Pune because all the towers are owned by Jio. So CCI will ask Jio to sell some of the towers to Airtel or Vodafone. Number 2, cancellation of shares or securities. Let's again go back to the cement example. We understood that 11 cement manufacturing companies were collectively reducing the price, collectively increasing the prices of cement. So let's take an example that I am the owner, I am controlling all the 11 cement manufacturing companies. So CCI will ask me to withdraw my shareholding from these 11 cement manufacturing companies. Number 3, formation of new companies. If Google is into digital advertising and also online search engine market, so if it is abusing its dominant position, CCI will ask Google to split into 2 companies so that 2 companies are operating independently. One company is operating into online search engine, one company is operating into ad advertising. Next, winding up an enterprise. If CCI believes that winding up an enterprise is the best solution, CCI will ask the company to close down. Last, amendment of corporate structure, changing the company rules. Let's take an example of again Instagram only. CCI can alter the company's memorandum of article of association to prevent future abuse of dominance, which means what? Instagram will be asked to not to purchase any other social networking company. Now you have exceeded limit by purchasing. Facebook has already purchased Instagram. Facebook has also purchased WhatsApp. So CCI will tell them that now you cannot purchase any more companies. You have to put it strictly in the memorandum or article of association. Next, penalty for offences in relation to furnishing of information. People, this is very, very important. Many times questions have been asked from this topic. When is a person penalized? Providing false or misleading information to the Competition Commission of India is an offence and penalties can go up to 1 crore. So when can a person be penalized? Furnishing false information. Number 2, hiding or omitting important information. Number 3, you are altered, you have destroyed, you have suppressed documents. In that case, you can be punished. Next, penalty for furnishing false information. Penalty can be maximum 1 crore rupees. Lesser penalty. When can a person receive less penalty? In 2 situations. Number 1, if I voluntarily tell to CCA that I have been involved in XYZ combination, or I make a full and true disclosure of all the information that I have to the CCA, I will receive less penalty. Next, I cooperate completely in the entire investigation, I will receive less penalty. Now, when will lesser penalty not be allowed? Lesser penalty is not granted if 2 things happen. Number 1, investigation report has already been submitted, already investigation is completed, then you are helping the CCA. What is the use of your help? Number 2, company stops cooperating with the CCA after making disclosure. Hence, in that case, lesser penalty will not be applicable. Now, when will the additional people, once again. When will the additional penalty liability be imposed? When the person makes the same mistake again. Even with a reduced penalty, a company may still face full penalties. When? For future or past violations, if it again re-offends. In that case, additional liability will be imposed. Is everybody with me, guys? Am I going too fast? Is my speed okay? Give me a quick thumbs up if you are with me, guys. Yes. Next, liability of companies and their officers for contravention of competition law. Important people, expected question will be asked in this exam. Under Competition Act 2002, both the company and its key officers can be held accountable for violating what? For violating competition laws. Now, who will be held responsible? Company will be held responsible, obviously. But apart from company, key officers in charge the time of violation, directors, company secretary will be held responsible. Anyone responsible for the company's business operation will also be held responsible. Now, can an individual escape from the liability? An individual is not held guilty. That means a company secretary or a director will not be held guilty when he was unaware of the violation. That means what? Or there are 5 directors in a company, 4 directors were secretly doing this thing and 1 director was completely unaware. That in that case, that 1 director will not be held responsible. That means next one is they took all reasonable steps to prevent it. That 1 director, even though he knew what was happening, he took all the reasonable steps to prevent that anti-competitive or abuse of dominant position happening by the company. Okay, he was taking all the measures. He warned them that do not do this, do not do that, but they did not listen to him. When are directors, managers and other officers also held guilty? When it happened with their consent, the person supported it. Number 2, connivance, which means what? The person knew it and they allowed it. Supporting is different, allowing is different. Allowing means you are not seeing anything, you are just watching whatever is happening in the company, you are not seeing anything. That means connivance. Next is neglect. The person failed to prevent it despite having the duty, which means what? I was not acting in a diligent manner. I was not acting in a proper manner. I should have been more careful, but because of my carelessness, I will also be held responsible. Execution of orders of the appellate tribunal. How are orders enforced? The National Company Law Appellate Tribunal has the authority to enforce its own orders under Competition Act 2002. If an individual or company fails to comply legal provisions of enforcement, then what will happen? Let's understand. How are orders enforced? People, basically, Competition Commission of India, any order that Competition Commission of India passes, we can appeal that order to NCLAT, National Company Law Appellate Tribunal. So how are orders enforced? NCLAT's orders are enforceable like a civil court decree. They are legally binding, similar to a court judgment. We cannot say the NCLAT is a normal court, it's a special court, so their orders are not enforceable. We cannot say that, okay? So their orders are as much important as a civil court decree. Number 2, if NCLAT is not able to execute its order, it will take help of a civil court in that jurisdiction. Let's say NCLAT has ordered Geo, NCLAT has ordered Geo to sell some of the towers to Airtel or Vodafone. Geo is not following the orders of CCI, Pune. So NCLAT it can send it to a civil court order in the jurisdiction of Pune where the company is involved, so that civil court, along with all the support police officers, it will completely sell the towers to Vodafone Idea and Airtel. The order is sent to the court where the company's registered office is located, or against an individual, the order is sent to the court where the individual resides or works. Which means what? If an individual is controlling shares in all the cement manufacturing companies, and the cement manufacturing companies are abusing the dominant position, and CCI has told me that you have to withdraw my share, I am not following, then CCI will, what will it do to us through a civil court? It will approach me. Understood? Next, civil court's role in enforcing the order. Civil court must treat NCLAT's order as a court decree and enforce it like any other judgment. We are done with Competition Commission of India, people. How is the Josh, people? Did you enjoy this session, people? Did you find this lecture super useful? Just drop me a thumbs up or just send me a heart, people. I'm so sorry to keep you guys waiting, to extend the time from 9 p.m. to 10 p.m. people. I'm so sorry, because I want you guys to be in love with this subject, people. From tomorrow onwards, I will try to wrap it up quickly. But economic law is a subject which I realized that lately the students are finding it very difficult or tricky. Okay, perfect. Now let's try and solve the MCQs. Okay. The DG of the CCI is responsible for doing either of the 4 things. Sir, please share the notes. Tejasvi Pawar, are you asking me for the handwritten notes or this notes? Yes, guys, quickly, let's solve 3 MCQ and then wrap it up, okay? Let's solve 3 MCQs. DG of the CCI is responsible for A, issuing penalty orders, B, conducting investigations and gathering evidence, C, hearing appeals against CCI orders, or D, amending corporate policies. What is the answer for this? Tejasvi Pawar, definitely. Did you fill the Google form, Tejasvi? Guys, what is the answer of 4th? Okay. Tejasvi will just ask the team to send you the notes, okay? Don't worry. What is the answer of 4th, guys? C. Are you sure? DG of the CCI is responsible for... People, the answer is B. Conducting investigations and gathering evidences, okay? Gauri? Next question. CCI can define the relevant market based on Product market only, geographical market only, both product and geography. People, this one was very easy, okay? Let's not go into the, yes. Which of the following is a factor considered by CCI to determine abuse of dominant position? This is important. What is the answer of 7th, guys? What is the answer of 7th? C. Answer is B. Yes, Tejasvi Pawar. Superb. Answer is B. Market share. Tejas, Abhinetra, I told you, Google abusing a dominant position, market share 90%. Remember? People, this is the reason why I give you examples, okay? So that you will remember everything. Next. Okay, let's not talk about penalty. A lesser penalty under the Competition Act is granted if the company cooperates fully with the investigation, hides documents, appeals to NCLT, merges with a competitor. What is the answer of 10th? Abhinetra, answer is 7th B, okay? What is the answer of 10th, guys? Yes, perfect, Abhinetra. What is the answer of 12th? Directors of a company can avoid liability under the Competition Act if they prove they were unaware, they actually supported, they destroyed, they benefited financially. Perfect. Atul, perfect. Gauri, amazing Gauri. All of you are completely right. I will try to find some difficult question, okay? Yes. Tell me this one. Which method can the CCI use to break up a dominant enterprise? Okay, amazing. Fantastic. Which method can the CCI use to break up a dominant enterprise? Guys, it really means a world to me when you guys are there with me till 10 o'clock. Seriously. Answer is D. Perfect, Abhinanda. Amazing. Perfect. Yes. If a telecom company owns all mobile towers in a region, the CCI may order shutting down the company, selling towers to competitors, increasing prices, merging with smaller firms. People today will try to solve MCQs till my battery reaches 1%. Okay, right now my battery is 2%. Till 1% we will continue with the MCQs. Okay. What is the answer of 15th? B. Selling towers to competitors. Perfect. Yes. 18th question. Tell me what is the answer of 18th question? Atul, perfect. Abhinetra, perfect. Tejasvi Pawar, perfect. You guys are right. What is the answer of 18, guys? The final appeal against NCLAT order lies with the High Court, Supreme Court, President of India, Central Government. 18B, perfect, amazing. CCA can act against foreign companies if their practices affect competition in global markets, India, neighboring countries, all of the above. Amazing. Abhinitra, Tejasvi Pawar, Atul, great guys, great. Gauri, super amazing. Yes, yes, yes. What is the answer of 19th? 19D, all of the above. Are you sure, Tejasvi Pawar? Tejasvi Pawar, tell me one thing. If Tesla is right now not in India, because of Tesla, other car brands in US or UK are getting affected. Will this come under the purview of Competition Commission of India? Tell me one thing. Guys, your logic is, I think you got confused with the question. My question is, tell me one thing. Tesla is not in India. If because of Tesla, some other company in foreign, US, UK is getting affected, will this come under the purview of Competition Commission of India? No. Then how come all of the above option will come? 19B, Gauri. Yes, yes, yes. Perfect. 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 Yes. Next, which principle does the CCA follow during enquiries? Abhinitra, answer is B. Okay, 19th B. Oh my God. Which principle does the CCA follow during enquiry? (22A) natural justice. Perfect. Perfect. Tejasvi Pawar. Perfect. Which law operates alongside the Competition Act without being overridden? Corporate tax laws, IP laws, environmental laws. This is a tricky question. Last question, guys, okay? (24D). Perfect. Let's try to find out. Yes, yes, yes. So guys, let's wrap it up over here. Thank you so much for watching. If you found this video useful, please share it with your friends who may need it. And it really means a lot to me, guys, when you are staying with me. When I told you that I'll be completing the lecture at 9 p.m., you are staying with me till 10 p.m. It really means a lot to me, guys. Thank you so much. Thank you so much for watching, guys. I will see you tomorrow. Tomorrow and day after tomorrow, we're going to wrap up the Companies Act 2013. Till now, we have completed SEBI regulations, we have completed FEMA, we have completed Competition Act. So 20 marks we are completely done with. Okay, 30 marks MCQ also we'll try to complete it off by the end of the marathon. Okay, so thank you so much, guys. It was lovely teaching you all. Okay, thank you so much. If you guys have to say anything, you can tell me, people. Tejasvi Pawar, thank you so much, sir. Welcome, Tejasvi Pawar, welcome. Perfect. So let's end it. Yeah. I will see you tomorrow. Okay. Bye bye. TSC Pawar, that's the I don't know what to say now. This is nothing, TSC Pawar. I can put a lot of efforts for you all, guys. Okay. Yes. Bye bye. Good night. Good night. Take care. Sleep soon. Okay. I'll see you tomorrow. Bye bye. Atul PS, welcome, bro. Welcome.